Good morning and welcome to the room. Hey Cheetah, Steve, Ron, nice to see you. Rob, great to have you. VCP Wayne, nice to have you in the room. I heard you might be here. Hey, good morning, Erla. Got some new names in here. I like it. Um, it's good to have you guys, new and old. Welcome to the room, it's the education room. That's all it is, just education, guys. We don't call trades. We don't tell you what to do. Yep, I am talking. Can you guys hear me okay? Give me a Y if you can hear me, please. All right, just wanted to make sure. Guys, if you ever can't hear me, always ask, hey, Mark, I can't hear you. Are you talking? And if you see all those Ys, that means that the microphone's working. You need to reboot or something like that. Work on your Discord. Make sure that everything is good in the way it needs to be. All right, guys. So we're going to do what we do because that's what we do. And it's fun. I have a good time every day. I hope you guys do. I want to talk about the class, guys, because I know that I have new people in here. So I wanted to share this with you. Class is designed to teach you 3 rules on 2 charts. That's it. And it's going to give you the skill set to recognize advantages and turn them into the trades. And what we do is we focus on these rules and we focus on these advantages. And what we're trying to do is give you a trade that wins more than it loses. And what I'm trying to do is give you a trade that becomes easy to recognize. And I'm trying to give you a trade that's going to create confidence. And the first hour, this is the part that I really wanted to do, is going to be focused on the rules, guys. The first hour is going to be nothing but rules, talking about these advantages, how to recognize them, how to study them. I'm going to give you everything that you need to be successful with the software. The next 2 hours, I probably didn't need to bring that up. The next 2 hours, the second 2 hours of class, are 100% conversational. I want to hear your feedback. I want to hear your input. I want to hear every question that you have in your head about what it is that I'm talking about. So that I can get you the answers that you need. And just if you are new, you don't need to request to speak. Just type right in the room. I try to get to everything in order. There will be days where I accidentally miss a question. If I ever miss one of your questions, guys, just repost it. Go, hey, Mark, I had a question at 8:59. Can you go revisit that? And absolutely, I will. Everything that we do in regards to trading is revolved around rules. And rules are designed to create advantages. Rules are based on patterns that repeat themselves, that have been studied, that have been back tested, that have been validated to give us a statistical advantage every time we get in the market. But I really feel like the first advantage that you can give yourself each and every day is go check news. Because the market is driven by people with emotional reactions, guys. Fear, greed, waiting for news to release. So for example, non-farm employment change. There's somebody with a lot of money that had an opinion about that. And when that went out, if you watched the market, it spiked. And the same thing was true for unemployment claims. And guys, the same is going to be true for the PMIs and even crude oil inventories. So every morning I go to forexfactory.com and I look for these high impact and these medium impact. And I personally make the decision to not trade about 5 minutes before. And if the market does spike and get really erratic, as it does, I make the choice to not try to enter a position until it's gotten to something that's slow enough for me to read my indicators to gauge my advantages. And I do that every morning, guys. That's the way I start class. And there's 2 types of people in the world. There's 2 types of people. The people that have traded in the news and been slipped a lot of money, and the people that are going to, because you almost have to forget it at least once and get caught, and then you're like, whoa, and then you're 100% on the news. I made the mistake of forgetting about an FOMC day once, and they slipped me nearly $2,000 a contract. Rookie mistake on my end from a veteran player. So it's okay. Mistakes happen. Everything that I talk about is from the Nexgen T3 com. .com page. This is just the home page, guys. This is where all the answers come from. Really everything that you need comes from here. But I want to talk about software guide first. This is the section that I want to talk about because this is the one that works with you on NinjaTrader. So if you have questions about scaling your charts or putting in stops and targets or building workspaces, opening, closing, all those things, the answers are right here for you. Even how to use your screen capture programs, how to share in class, because this is a very vital part of what we do, is the feedback. So all of that is in here. Just roll through it. Take an afternoon, take 10 minutes, click on links, look at it, and know that these answers are available for you. And of course, I encourage you in class, ask. If you have a NinjaTrader problem, just ask in class. If you have a scaling problem, a stops and targets problem, give me the opportunity to answer it. I'll give you everything in my knowledge bank, and I'll point you to where you can find it should you have a challenge again outside of class. And then the trading guide, everything that I talk about in this room can be found in this trading guide. I don't make stuff up. I don't withhold everything. I honestly am going to give you everything that you need to be successful with the software. The only thing that Nexgen doesn't give you is experience. It doesn't give you repetition. It doesn't give you the reps and the practice. And you've got to develop your level of trust with what I teach. Every day we talk about one trade for the first hour. And it's a high probability trade. And that means that each indicator on every chart is going to agree for the trade. So this is when, hey, good morning, Ed. Good to see you, man. This is when all their triggers are the strongest, and this is where no termination conditions exist, and there's no trouble spots between your entry and your target, guys. This high probability trade is the best of the best, and the way it's taught is a high probability trend trade. It's a trade that typically wins 70 to 80% of the time. It's a trade that creates an enormous amount of confidence through the memory of success. But the most important thing that this high probability trend trade does for you as a Nexgen user is it teaches you to read your charts, to read your indicators. Becoming a chart reader is the goal. Because once you're a chart reader, once you can look at your chart reading is going to let you know if your rules are met, if your advantages are present. And chart reading is about 90% of your day. And this is a true story, guys. 90% of your day is chart reading. You are sitting on the sidelines and you're waiting for these advantages to come into play. And when they do, that 10% is going to be 10% is going to be actually acting on it. So VC Payne, P Wayne, I'm going to call you VCP. A trend trade is the trade that I'm teaching right now, and what it is the recognition of a market that's already moving in the direction of the trade, and a market that has the absolute strongest triggers, and then we're going to rely on a little fluctuation, just a little pullback, and to continue with the trend. You might also think of it as a continuation trade. A momentum trade is going to lack the pullback. It's going to be a quick little spike that relies solely on the advantage of momentum to get you where you want to be and to take profits. And both are outstanding trades. And typically a momentum trade, if it fails, if that momentum is lost, but the large chart is giving us the strength and the clear path, failed momentum trades typically turn into trend trades. And I hope that made sense. And hopefully it will more by the end of the first hour. I teach the trend trade. I focus heavily on these 3 rules. And that's all a trend trade is, a high probability trend trade is it's 3 rules. Each rule is designed to give you an advantage, guys. And these are the advantages that you're going to look for and talk about every day when you're looking at your charts. First rule will give you the advantage of momentum. Obviously, you're going to need to understand that in order to take a momentum trade, but also a high probability trend trade. So you'll literally find that this trade sets you up and opens doors to take all the other trades that we teach. Termination's false. The second rule is going to make sure that you have room to your profit targets, and it's going to assure you a clear path, making sure there's nothing between you and where you want to be. No key areas likely to stop the market. And then rule number 3 is specific to the high probability trend trade. Rule number 3 is designed to put you into the market where the market is most likely to continue, where that bounce is most likely to happen to continue with the trend so that you can advance forward with the momentum, with the clear path. Your rule number 3 is going to change as you grow with the software. So I encourage new users, focus heavily on momentum and clear path. If you keep it basic, you will understand, be able to recognize and capitalize on these advantages within your first week with me. Keep it very, very simple. These 3 rules are going to happen on only 2 charts. I'm not going to add charts. I'm not going to add higher time frames, lower time frames, range charts, month charts. I'm a big believer that too much information does more harm than good. So we're going to use a large chart and a small chart. Your large chart is going to use the most current bar, the first bar in the play, and it's going to define the direction of the market. It's going to define the momentum in the market through rule number 1, and it's going to define whether or not you have a clear path, whether you have room to your targets through rule number 2. 66% of your advantages for the high probability trend trade come from the large chart, and there's not even any reason to look at a small chart until these advantages are in play for the new user. But once they are, once the momentum is solid, the path is clear, we're going to use an entry chart. And the entry chart is a smaller, faster chart. It's a refinement chart. It literally takes an x-ray of that one bar. And I want to show you this picture. I was talking to a friend of mine this morning. In this one bar on a large chart, all of these bars printed. And it's very much a refinement. It's taking an x-ray of all of the price action inside of that big slow moving chart so that we can pinpoint exactly where the market is most likely to continue. This is going to allow you to reduce your risk dramatically, and this is also going to allow you to increase your profit potential. And that's rule number 3 initially for the high probability trend trade. It's nothing more than getting into the market, and that's really all that I talk about for the first hour, is just getting in at the best of the best spot. We use these 2 charts because they're very much a reflection of who you are trading with or against. The large crowd is your large chart. The large crowd are the men and women with enough money to make the market do whatever they want it to do. If they wake up and they say, you know what a great day for an uptrend, we're going to be in an uptrend. These are also the people that are establishing the momentum in the market, whether or not we have the strength we need to create a market likely to continue in the direction of the trend. And these are the same people that are reacting to those key areas, those Fibonacci areas on your large chart. Good morning, Morgan. And the large chart leads the way. The large crowd is who we want to be trading with. Your small chart shows the fight. It shows what the small crowd is doing. And guys, the small crowd is still 1,000 times bigger than we could ever hope to be. The small crowd has enough money to create these little shoves, these little retracements against everything the large crowd wants. But the great thing is that the small crowd typically fails 70 to 80% of the time. They're not trying to change the trend most of the time. They're just trying to take quick profits or jack with the large crowd people. We're going to use the small chart to pinpoint exactly where the small crowd is most likely to fail, and this will become your entry for the highest probability trend trade. So we're going to keep it real simple, guys, and this is your step-by-step path to getting to where you want to be. This is the path that most people fight in the beginning, myself included. I was a day 1 student as well, guys, and it's a little overwhelming on day 1. It feels like there's a lot of information. There's a lot of verbiage that comes through. I want to remind you that you don't have to know how to build a watch to be able to tell time. And that's how I teach this class, is not getting technical. Engineers, I drive them nuts because I don't give all the specs on everything. We're going to focus on patterns, guys. We're going to focus on learning the trigger line and the Fibonacci rules for when it's okay to trade. And it says for when it's okay to trade because I want you from day 1 to get in this mindset. The only way that I'm going to enter a trade is if my rules are met. And if my rules aren't met, I'm going to fight that temptation to trade without advantages. You guys can simulate. That's one of the cool things about NinjaTrader is you can practice with zero fear, guys. Simulator will not drain your personal bank account. It won't make your wife leave you. The dog won't bite you. They won't repossess your Ferrari, guys. Simulator is where you need to break everything, where you need to have challenges, where you need to break rules, where you need to enter late or exit early. But what you need to do is take those pictures and post them in class. Every time you take a trade, every time you have a chart read that you're unsure of, post it in the room, guys. It's like getting a private session with me. And I encourage you guys, don't hide losers from me. Show me the losers, because the losers are what we want to avoid. The losers are what we're trying to correct if there's something that we're doing that's creating them, that's taking away our advantages. And of course, I don't want you guys practicing the wrong rules. I want to see you at least working towards rules adherence, because one of the things that happens is people see, oh, it's just simulator, it's fake. I'm just going to try and run up the P&L, and your brain doesn't realize that it's not real, and you're creating a muscle memory. And people that are simulator millionaires getting lucky tend to blow out pretty quick once they go live. So post your trades in class. This is the first step. This is the first step. And then, guys, track your stuff in the spreadsheet that I give you every day, that Nexgen gave you when you download it. I'm dropping mine in the room right now. Download it. Because it's this spreadsheet that's going to help you understand what looks that you're going to commit to. Taking pictures, annotating pictures. It's a little bit of busy work, but what happens is you start to correlate these rules with what it looks like, and everything starts to get easy. The market starts to slow down. You know exactly what it takes to get you in a trade because you've seen it 100 times in pictures without the fear of loss. And this spreadsheet, guys, I just dropped it in the room, has 4 pages. The first page is your tracking sheet, and this is nothing more than it's a trade journal. Even the CME says, hey, have a trade journal. You need to be able to track your progress. And that's what the first page is, guys. You can put your pictures of your trades in here. What type is it? When did you do it? And notice that the only 2 advantages that I mentioned are momentum and a clear path, because I firmly believe that if this is your focus, you'll be amazed at the success that you can find. You can track your wins and losses, and then feedback from class. Every time you post in the room, I'm going to look at your chart. I'm going to talk about your chart. I'm going to go back to those 3 rules, and I'm going to make sure that your chart read is accurate. And this is one of the things that I'm going to share with you real quick. Make sure that when you post in the room, you talk about the momentum. You talk about the path, whether it's clear, whether it's not, and where you entered and where you exited. And this does a couple things for me. One, it lets me know how you're reading the indicators. Are you reading them correctly? And if you're not, we'll talk about it. If there's a misunderstanding with one of the rules, we'll be able to clear it up and say it in a way that makes sense to you. Sometimes you enter early, sometimes you enter late, sometimes stops are too tight, targets don't make sense. We'll discuss all of that on your small chart. And what happens is every time you present, we start working together to get you in the place that you want to be. And one of the things that I'm really good at is recognizing patterns. Not only in the market, but in you. So everybody has a thing. Some people like to jump in, and some people like to fight those termination conditions. Guys, you give me 5 pictures with your annotations, I'm going to recognize what your thing is, and I'm going to have a plan put in place for you to correct it if it needs correcting. Or if it's just amazing, then we'll just work off of praise and you can repeat that. And that's where the spreadsheet really pays dividends, is when you come back and study the trades that you post into it, asking yourself what worked and what didn't work and what felt easy and what felt forced. And you're going to begin to recognize the patterns that are bringing you success. And you're also going to recognize the patterns not only in the market, but also in yourself that may be robbing you of that success. So I encourage you guys, really take advantage of that spreadsheet. I've given you a tab with the rules for the high probability trend trade broken down into the green section, individually annotated pictures put in there by me to help you learn these concepts. And then I've also given you the red sections that are when the rules aren't met. Because I think it's important to not only know when you have advantages, but you should be able to look at your chart and say, whoa, this isn't right. It's not time to take a trade. And I think taking pictures is actually more advantageous than taking trades in the first week. but I do want you taking trades. There's a favorite looks section. This is where you're going to build your trading plan. All the things that make you happy, all the patterns that are bringing you success, you should have pictures of them. As you work on management, as you begin to recognize those patterns, guys, the people that take the most pictures and annotate the most pictures get to where they want to be the fastest, especially if they drop them in the room. And then I've got the Nexgen trades, guys, client trades. This section is what the favorite look section should look like for you after about a month of being with me. All of these trades are just Nexgen clients using momentum, using clear path, embracing those entry areas. They don't all stick to the rules 100%, but this is a great example of what you can do when you begin to recognize advantages. It's also a great example of how you can see that there's a common thread between the winners. Momentum. Momentum is there for everything, guys. There's a lot on management, patterns that repeat themselves, termination conditions. So my hope is that you can make your section look like this one with just a little bit of elbow grease. Keep it simple. We're going to talk about the high probability trend trade, guys. We're going to focus on only 3 rules on those 2 charts. Are there any questions before we get going? The first hour is very lecture-y. I realize that. Don't be afraid to interrupt me, guys. I don't have a syllabus or a time frame that I have to be done in. And I enjoy the back and forth. It kind of keeps it cool for me. Rule number 1 says the large chart, your big chart, the slow chart has to have strong trigger lines. Strong trigger lines are going to provide us the advantage of momentum. So let's define it. First, let's define trend. Typically to be in an uptrend, you have to have higher highs and higher lows, right? Or to be in a downtrend, you have to have lower lows and lower highs. We're keeping it even more basic, guys. If your background is green on your large chart, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. Trading with the trend, with the large crowd's a huge advantage. And then in order to have strong triggers, trigger lines there's 2 parts. There's your small triggers, the solid lines. These are a fast moving average. Then there's the large triggers, the dashed ones. These are a slow moving average. These work together to create momentum, guys. The small triggers need to break up and above the large triggers. The large triggers have to be wide and angled in the direction of the trend. And here's one of the things is the colors have to agree. The background has to agree with the large, has to agree with the small. And the separation, let me get my pen. I want you to picture scissors that have just opened and are ready to cut, or Pac-Man ready to eat, right? When the scissors are open, when the smalls are above the large, when the smalls are below the large, when there's space between the two, guys, it's that separation that lets me know that the odds are favorable for the market to continue in the direction of the trend. So strong triggers up, the market's likely to continue up. And strong triggers down, the market is likely to continue down, guys. And these strong triggers, rule number 1, this is the best of the best. And there's people in this room that have trading plans designed solely around momentum. And when you have it, the market's likely to push. When you have odds favorable momentum, as we like to call it, the odds are favorable for the market to continue in the direction of the trend. You're going to see it on charts, OFM. When you have that odds favorable momentum, this is also the look that can break those key Fibonacci areas. And guys, this is the look that can cover mistakes that new users tend to make. Strong triggers lead the way. Strong triggers are rule number 1 for a reason. And then when your scissors close, when your small triggers work back inside of the large triggers, we call this a weakening of the large triggers. And when it's weak, anything can happen up or down. And you'll find, as you spend a little bit of time with me, new users, that I'm a big fan of language. And I think that the language that you use does wonders to keep you focused. And if I'm looking to take a trade, strength, odds favorable momentum, it makes sense. Weak, anything can happen. You've got to associate that. And this has got to be a giant red flag that says, hey, maybe this isn't my trade. And you can recognize odds favorable momentum. Just open up a large chart. And here's an amazing picture already. Let me just snap it. Separation between the small and the large. Everything is up. The market's going up. And it even breaks through a key area almost. There it is again. And then there's strong triggers down. And then when the triggers don't match, we're right in an indecision phase. And one of the easiest ways to recognize this is go back and take a few pictures. Commit it to memory. Is everybody good with that? This is usually the easiest lesson of the day. Strong triggers. Separation between the small and the large. Can you give me a Y if you're good? I see a lot of new names in here. I want to make sure I'm not leaving anybody behind. You guys doing all right? Paul Flowers, I love that you always give me a Y. Thank you for that. Thank you, Christine. All right, guys, so strong triggers leads the way. Strong triggers gives us the advantage of momentum. Strong triggers can push a market in the direction of the trend. It can break key areas. Once we have it, we're going to make sure that there's none of those key areas in our way. And we do this by making sure that termination conditions are false, that we haven't reached an area that has the potential to stop the market. I just dropped in the room the picture for you so you can download it and take it home. I'm also going to give you this PowerPoint. But areas on the large chart can create problems, guys. Areas on the large chart are where the large crowd are making decisions. These are where the buyers are buying and the sellers are selling. These are where positions are entered and exited. And guys, very often this is where fights happen between the two forces. You don't have to know why they come to be. You don't have to know the magic that goes into creating them. But you do need to know that you'll be looking for divergence high and divergence low lines. And divergence is just Nexgen's way of saying loss of momentum. When the market goes up and comes back down, creates a pivot. If momentum is lagging behind price, you're going to see a magenta line from a high. You'll see a cyan line from a low. We're going to use Fibonacci resistance and support, guys. And resistance just means that the market's trending up to the line. And it's a point where the market may stop, may bounce, may reverse completely. And then support, when the market is trending down, is a point where the market may stop, may bounce, may reverse completely. And then we're also going to use these yellow 1-to-1s. And the yellow 1-to-1s, if the market is trending up, they behave as resistance. And if the market is trending down, they may behave as support. So understand which lines we're looking for. And really, these are all the lines. This is just a roadmap for you. But to determine whether or not they're likely to stop the market, the first thing that has to happen is that price reaches the area. We insist on the price bars hitting the area because the large crowd is going to make those decisions, guys, and they're not going to make the decision before they reach. Nobody ever goes to McDonald's and orders a cheeseburger here. You wait till you get to the window, right, to the speaker. So price reaches resistance. It can be a divergence high. It can be a yellow 1-to-1. It could be a red Fibonacci line. When price reaches resistance, all you have to do is ask yourself, where are my triggers? If your triggers remain below resistance, resistance is an area that may stop the market. Notice that may is in all caps. It's not guaranteed to stop the market. But because of this trigger look below the area, it stops the market more often than it doesn't. If you take 1,000 pictures, at least 51% of the time, it's going to stop the market. And the reason that it becomes a rule is because it does it enough that you're more likely to lose trading into one of these lines than you are to win. So we want to eliminate that from our trade setup. So if price reaches resistance, triggers remain below, no trades into that area, guys. And then if price reaches support, divergence low, yellow 1-to-1s, blue Fibonacci, all you have to do is ask yourself, where are my triggers? And if the triggers remain above support, no trades into that area. The path isn't clear. And guys, that is about the most basic approach. If price reaches resistance and the triggers don't break, look at the big untradeable bounce. Look at how support creates a bounce. Resistance is where it reversed. All you have to do is scroll back a little bit and you will be absolutely floored at how accurate these areas can be in creating bounces in the market. And I encourage you, go back, take pictures, learn to trust it. But you need to know when it's not okay to trade so that you can understand when it is okay to trade. If price reaches an area and the triggers remain above support, no trades for the moment. It doesn't mean no trades forever, guys. But what it does mean is that we don't know what the reaction's going to be. We don't know if it's going to bounce, if it's going to stop, if it's going to stutter. So we choose to do nothing. I choose to do nothing because I want to make money. I don't want to throw it away. Every line you hit will be a termination condition, at least for a moment. And then you're going to see those small triggers, that faster moving average, smash through the area if this area is likely to break or has the potential to break. And if it does it with that level of momentum that we're looking for, those strong triggers, this blue line has the potential to break. The same is true over here. The small triggers smash through, but the large triggers are lagging behind. But with all of this momentum, this area has the potential to break. It's nothing more than the potential, though. The path is not clear. This is not a high probability scenario. Your area is not considered broken until both the small and the large get to the other side of the line. And then support begins to act as resistance. Very often you'll see a pullback to it, a retest of the line. Resistance behaves as support. And again, all you have to do is open up a large chart to see this phenomenon. Resistance turns into support. The market pulls right back to that support line before continuing up. Begins to break, pulls back, hits a fib, comes back to the fib. You can see these tails where they break and they pull right back and retest it. So there's a lot of study that can be done by going back and looking once you learn the very basic concepts. No triggers, no trade. Small triggers, potential to break, but it's not broken until both go through. And then we're looking for that high probability trend trade. And once again, I'm just going to ask, are you guys with me so far? It takes a little study. And on day one, especially for my new people, I can't stress this enough. And I love doing this one. Guys, this is day one for 90% of us. For 90% of us on day one, it's like drinking from a fire hose. There's new terms, there's new looks, there's rules to learn, and you're wondering, how the hell am I ever going to be able to do this? And I promise you, because I've been doing this for years, by day 3, if you focus on just the very basic concepts, it all begins to make sense. And when it starts to make sense, everything clicks and you're like, oh yeah. And I've got people that have found success in the first week. And they do it because they keep it very, very simple. So don't feel like you have to know everything on day one. Soak it in, have a good time, and you're going to get to where you want to be. You're on day 3, Moose. Man, you'll be good. So here's one thing. By day 3, Moose, I want to see you start posting pictures. Tell me what you see. And it's hard to do that. Guys, it's hard to post in a room and risk being wrong, right? Because most of us are alpha males and alpha females, and most of us have had an enormous amount of success in our careers, and we're not used to being in a student role. Make yourself a little vulnerable. You'll get to where you want to be faster. But Moose, you're stuck with me, man. We're going to get there. So on day 3, though, are you starting to say, yeah, I can see momentum? And on day 3, you're starting to hear those rules echo a little bit. Even if you can't put them together, you're beginning to learn the terminology. Absolutely. And it just gets better every day. One of the things, and I like to show this when I talk about termination conditions, is you might be looking for a long trade and price reaches resistance and you're like, I'm going to be so patient. And then the small and the large get above resistance and it's behaving as support. And then, damn it, there's another line. And you're like, oh, this is crap. I had a clear path. Guys, the process starts over when you reach the next line. So clear paths don't always last forever. Sometimes they're very short-lived. And this is where you have to remind yourself that 90% of your day is spent reading the indicators, that 90% of the day, guys, is doing absolutely nothing. You're texting your spouse, you're playing video poker off to the side. If you're me, you've got a sketchbook or your iPad in front of you and you're drawing silly pictures. because price reaches support and we know we have to pump the brakes. And right as you think it's going to break, it hits the next line and you're like, dag nabbit, I still can't go short. And then it does it again. And your fear of missing out starts to kick in. And your fear of missing out says, oh, Mark, just take that trade anyway. It's 7:12 in the morning. How the hell are you going to get paid if you're not rich by 7:30? And I'm telling you, your brain's going to say that. Guys, you have to remember 90% of your day is doing nothing. 90% of your day is just waiting. And these Fibonacci areas give you the ability to see where the driving forces of the market are likely to make decisions, where the fights may happen, where the reversals may take place. And just waiting, what you'll find is that rule number 2 can keep you out of consolidation. Rule number 2 can keep you out of chop. So like Moose and VCP, I don't know if you have trading experience, but what I find very often is one of the biggest advantages that what we do brings people is, let's see if we can, God, this market's just kind of bouncing, right? This is a great example where rule number 2 isn't met for, an hour and a half. And you don't have to get chopped up in these areas hoping that it goes up or hoping that it goes down. None at all. Then VC Payne, you are in the best spot ever. Because I came at this with nothing. Absolutely nothing. Which means I didn't have any bad habits to break. And I didn't have any confusion from old terminology. So I came at it the same way you did. But rule number 2 will define ranges. And rule number 2 will keep you from trading into these key areas. So rule number 2, guys, it's awesome. And it's the most broken rule out there. Yeah, so no trading bad habits, right? I don't know what else is going on, VCP, but you might be a nail biter or something. But yeah, coming at this with absolutely nothing is brilliant because you don't try to compare what we do to what you've done. And a lot of the times when I get people in here that do have experience, they'll just use what we have to accentuate what they already know. So either one is totally acceptable, but I love it when people have none. So I'm going to ask before I show this picture, is everybody okay? Lines on the large chart can stop the market. Lines on the large chart can create untradeable bounces. It's the lines on the large chart where the large crowd is making decisions. And guys, we don't want to trade into them. But when the large chart, and here's a beautiful picture, has odds favorable momentum. When the large chart has nothing in the way to create a bounce, guys, we're going to go to that small chart. We're going to let the small crowd do their thing. There is one termination condition, only one, that when I have the rules met on the large chart, that I will consider rule number 2 not met. And that's 3 divergences in the same price range. And 3 divergences means 3 losses of momentum. That's all it is. Divergence is a loss of momentum. Do you guys remember that picture that I showed earlier? That X-ray inside of one bar? Look at all of these bars. So what happens is your small chart will show change that you can't see on the large chart. Your large chart said up with strength. Well, it was into a termination. Your small chart showed the absolute fight between buyers and sellers. So the small chart's going to help show change. And the one thing that it's going to show is divergence. Price goes down, price goes up. If momentum, we'll make it black, is lagging. If momentum does not follow price, you're going to see that blue line. Don't worry about the negative number. It's a byproduct of the calculation. 3 blue lines from a low, 3 magenta lines from a high, guys. This may stop the market. It may end the trend. It's your small chart telling you, hey, the large chart's slowing down. You just can't see it yet. It becomes more powerful when you embrace the weak triggers, enhance it. And that's just a rule number 1, right? It's either strong or it's weak. So it's weak in 3 divergences. It's more powerful. And then it's even more powerful if the final pivot is higher than the previous, if price couldn't match the previous and you are losing momentum, guys, this is what we call a head and shoulders look for you guys with no trading experience. I didn't have any either. I had to learn that term. Same thing from a high. If your final pivot is lower than the previous, that head and shoulders makes it even more likely to stop the market. But 3 divergences is the only time on a small chart where I'll say rule number 2 isn't met. And that happens after the large chart has already told me that it's time to go look. Because when I have momentum and when I have a clear path, I want that small crowd to fight. I want to find an entry. It's time for me to try to make a little money. And our entries, man, they're precise. Our entries are very, very pinpointed, guys. So much so that you're going to use a limit order. And a limit order means that you're going to place an order and force the market to come to you to get into your position. And you're going to have a limit order waiting at areas. Fibs, mid-bands, or yellow 1-to-1s. On the large chart, these lines on the large chart were problematic. We had to let them break. On the small chart, we're going to use them as a bounce point to go on with the momentum. We're going to use them as a bounce point to continue with the trend. But the thing is we want those areas, and this is very important, new users, to be inside of what we call favorable large triggers. And this is the best of the best. This is the look that gives you the least amount of risk. This is the look that provides the highest chance of success. So favorable large triggers means that on your small chart, your large triggers, which are the smooth triggers, these are the triggers you'll use with the small to determine momentum. The synthetic triggers, these are nothing more than the large triggers from your large chart. And the one gospel truth about these trigger lines is that price returns to large triggers. They're moving averages, and price corrects right back to large triggers. So what Nexgen did is they took the large chart large triggers. Let's see if we can put these two together, because that sure looks like a good example. Do you see how price just pulls right back to it? And then on the small chart, let's see if we can get it. Oh, that's 1521. I don't even know when that was. Price pulls back to the large triggers. Price pulls back to the large triggers. And guys, you see this all day long, where price corrects to those large triggers. So we took them from the large, we took them from the small, and they're running on the same small chart, guys. 2 correction points. So when the large and synthetic, I'm rambling, I apologize. When the large and the synthetics are overlapping, when they're wide in the direction of the trade, guys, when they're one on top of the other like snakes riding piggyback, you've taken the correction point where we expect price to go from the large chart, and you've put it in the exact same location as where we expect price to go on the small chart. And this small little area gives you the absolute smallest space to put in a fib, a mid-band, or a yellow 1-to-1, something to bounce off of. Triggers are where we expect the bars to return. The areas inside of triggers are where we expect it to bounce. So favorable large triggers, brand new users, creates the least amount of risk. It creates the most accuracy. When your trigger lines begin to split, to separate from one another, it's going to decrease the accuracy, and it's going to increase the risk. Because if it could go from here or here, well, then our stop has to go way outside where the market shouldn't go. And you're going to see that in this next example as we define our entry point. I'm sorry, Pete. So once again, the large chart should say up. Green background. The large chart should say odds favorable momentum, that separation between the small and the large. Your large chart should have not reached an area. The path needs to be clear. When those rules are met, we're going to let the small crowd do their thing, guys, and it begins with a reversal bar. This reversal bar signals the beginning of a pullback, that fight from the small crowd. The reversal bar is not your entry, guys, but the reversal bar is what's going to get you looking for your entry. The first thing you're going to do is you're going to locate your large and synthetic triggers, one on top of the other, overlapping in the direction of the trend. And it doesn't matter if the synthetics are above the large or the larger or, a little bit above the synthetics. Neither of these is more important than the other. What's important is that they're overlapping. And then once you locate the triggers, which is not your entry, you're going to find the areas within fibs, midbands, and yellow 1-to-1s. Again, it's not just a midband, and it's not just a fib. Any of these areas, they all have the exact same power to create the bounce. You're going to create a window of opportunity, a point where you pinpoint exactly where the small crowd is most likely to fail, where the market is most likely to bounce to continue with the trend. And your window will extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. Notice that I say inside of favorable large triggers over and over and over. This is where the market is most likely to bounce. And here's the deal. I don't know if it's going to be from the highest point or the lowest point. The honest truth is I don't even know if either of these are going to stop the market. But this is where my highest chance of success comes from. This is the entry that puts me in a trade that typically wins 70 to 80% of the time. Because of the momentum and the clear path on the large chart, I'm going to put my limit order 1 or 2 ticks above that highest point of support inside of favorable large triggers. I'm not going to risk missing a trade trying to save a couple bucks. Your limit order is going to go right here. And if the small crowd has it in them, they're going to put you into that trade, guys. This blue Fibonacci line on the wrong side of triggers, beyond those triggers, beyond the correction point, guys, this is not a part of the window. This is not a part of the equation. And in fact, once you get to the wrong side of the triggers, you don't have any idea where that market's going to turn from. It's the combination of triggers and lines that gives you the highest advantage. In a short trade, reversal bar signals the beginning of the pullback. This is not your entry. You identify your trigger lines, the red box, large and synthetic, and then you search for areas within fibs, midbands, yellow 1-to-1s. In this case, there's just a midband. That's it. Which means that your entry is about 2 ticks below that midband inside of favorable large triggers. And if the small crowd gets you, guys, you're in a high probability trend trade. You have every advantage, and you have a market that is likely to continue in the direction of the trend. Is everybody with me? I know it's a lot to take in, new users, but all we've done so far is we have talked about, and let me see if I can find a picture, right? We've talked about letting the large chart lead the way, right? We've talked about making sure that the large chart has momentum, that the large chart has nothing in the way. And then when everything says up on the large chart, we go to the small chart and we define exactly where the market is most likely to continue. And this is going to become your entry. And guys, if you give me 20 days of trying to keep it simple and 20 days of focusing on where the market is most likely to continue, what it does is it establishes where the market shouldn't go. The market should not go beyond those trigger lines. The market should not go beyond those areas inside of favorable large triggers if it's going to be part of that 70 to 80%. But anything that wins 70 to 80%, so moose and VCP, I want you guys to know this from day one. You will take losers as a day trader. You will not win every trade. I've never met anybody that's won every trade. But you can put your stop in an intelligent spot where the market shouldn't go. And this is going to help you decrease losses. Because if that small crowd blows through this fib, that midband, those 1-to-1s, and gets to the wrong side of the triggers, your advantage is gone. You don't want to be in that trade anymore. You want to get the hell out and wait for the next best opportunity. So understanding where the market is likely to continue lets you know where the market shouldn't go. That's your initial stop placement. And the great thing is, with all those advantages, you're more likely to get a reversal bar in the direction of the trade than you are to get stopped out. And if you do, you'll reduce your risk a couple ticks above that reversal bar when everything is going down, a couple ticks below that reversal bar when everything is going up. Moose VCP, are you cool with the idea of a reversal bar? When all these red bars, the next green one, that's your reversal bar. It just means it's going the other direction. Okay, cool. And guys, that's it. That's my first hour. Every hour, all I focus on is entries. The only thing that I talk about are 3 advantages in getting into the market where the market is most likely to continue. And I showed this picture, and I'm going to show it again. The easiest way to study this isn't to take a trade. The easiest way to study this is to scroll back on your large chart, to look for the rules being met. Look for that momentum. Make sure that it hasn't hit the next line. And if you see one of these tails, guys, this tail is actually the pullback on a small chart. Circle it. And if it lines up with areas inside of favorable large triggers or inside of triggers, guys, you have a trade. Take that picture, annotate that chart, commit that look to memory. And that's how you're going to study the high probability trend trade, is to go back and really just see where it happens. So I'm going to do it here. This is the S&P. And just for grins, I like to do this sometimes so you guys don't get caught up on anything. And all you do is look for tails. And this is how you're going to study. I can take everything off but the tails. And once I apply it and come in, I can just circle tails, guys. When I have momentum, I want to circle the tail. And this is how we're going to commit the look to memory. Let me let it calculate real quick. Come on, calculation. While that calculates, there we go. Notice that the tails came back to the large triggers too. And if I scroll back on my small chart, well, that's mid-band's kind of caught in between the two. Not really fitting my rules. So I scroll back and I look at the next tail. And I scroll back. And again, it's those split triggers a little bit, guys. And this is what happens when there's a key area in the way, as you start to get that dance. One of the reasons that having that clear path is so important. There's a pullback right to a mid-band, right inside of triggers. And where was that circle? There it is. Finally, right? 90% of your day is waiting. But guys, that's the look right there. And this is without the advantage of having areas on the chart. But with momentum, that pullback right to the mid-band, right inside of the triggers, guys, sure enough, it produces a winner. And it won't always, but that's your look. This is the look to commit to memory. So you can go back and study that. And you can go back and practice that. And you can go back and annotate these pictures. And you don't have to be in a trade to recognize this pattern. The easiest way to recognize it is to break it down individually. To not look for a trade. Did we lose you guys? Can you hear me? Give me a Y if you can hear me. It says my microphone's still on. Okay, cool. Thank you. You've just got to recognize these individual pieces, guys, and then you're going to turn them into a trade. So to get to where you want to be the absolute fastest, remember that 101 section with the rules on it? This is designed to go with that. Take 25 pictures each, and don't overwhelm yourself on day one trying to get this done. Take 3 pictures today, right? Take 5 pictures tomorrow. But get pictures of strong triggers and weak triggers and know the difference between the two. Take pictures of a clear path and a termination condition and know the difference between the two. Go take pictures of what it looks like to have a high probability trend trade entry and understand that it's a pullback to an area inside of favorable large triggers. And then what you're going to do is you're going to piece these together to create a trade. But the task isn't to just take a picture. And this is where I kind of harp on the idea that language is important. Talk about the whys. Why is it strong triggers? So let's see if we can just find one of the pictures. Because the smalls are above the large, and that space means strength, and that's odds favorable momentum, and that's rule 1. And if you draw this picture with that arrow and you talk it out like this, you're never going to miss strong triggers, especially if you do this 25 times. You're going to be committed to not only what it looks like, but what it takes, what it means to you, what rule it pertains to. And the same is true when you do clear path, right? Clear path. When both the small and the large triggers are below support, support is now broken. The path is clear until price reaches the next area. And then the process begins again. By writing this out 25 times in a row, you're always going to understand what it takes to be broken and when that clear path is done. And guys, I encourage you to do this. And if you do, I can tell you right now, nobody's ever done this and called me up or posted in this room and said, you know what, Mark, that was useless. Most people say, man, now it's so easy to find. It's so easy. And guys, that's one of the things you don't have to pay attention to once it's committed to memory. So I'm going to give you this part of the promise that I give you everything that you need. I'm also going to give you this one, the high probability trend trade checklist. Guys, this is pictures of what it means to have the different parts met. So the first thing on your checklist is going to be, is the market coming from a strong top or bottom? And guys, this isn't important. Well, I mean, it's important, but it's not mandatory. It's not one of the 3 rules. But when a termination condition reverses the market, when a decision was made at a key area, so impactful that the market screamed the other way, it sets you up for the highest probability trend trade that you can take. Odds favorable momentum. There's your strength. There's your weakness. Clear path. No triggers, no trade. One trigger, potential to break. Both triggers, the path is clear. And then your window of opportunity all the way down to where your limit order goes. So what you're doing is, as you're taking your pictures, you have a cheat sheet to make sure that you're taking the correct pictures. And if you're still not sure, then you need to be posting in the room and asking questions. And then the second page is the checklist, the trend trade checklist. It's the exact same thing. Print this out, put it on your desktop. And I'm going to encourage you guys, write these rules on your chart. Use the exact verbiage. Area inside a favorable large trigger, small chart. And what you'll find is that it's the words that get you focused on what it means to have the rules met. I sent a picture to someone this morning that showed me a potential entry, and my reply was, there was no areas inside of those favorable large triggers. All the areas were on the wrong side of the triggers. And because they were on the wrong side of the triggers, I want you to see this because we learn this lesson every day. Where was that picture? I take so many pictures. Well, hell. I don't know where it went. I'll find it. But the areas weren't inside of the triggers. They were on the wrong side of the triggers. And sure enough, the market continued down and went right through the potential trade. So learn the language. Make the language important to you. Make the language go with the pictures. Make the language show up on the chart with the rules being met. And what you'll find is you'll get to where you want to be a little bit faster. And then once you get these basic concepts down, guys, and even before you do, you have to have a plan. You have to have a trading plan. You have to know why you're going to get into the market. And this is the KISS plan. This is the easiest approach to learning how to read the software that we've been able to come up with. And this KISS plan is a stepping stone in your journey. The high probability trend trade isn't your only trade. It's your first trade. It's the trade that typically wins the most. It's the trade that creates confidence. It's the trade that teaches you to read your indicators. And guys, it's also a really solid trading plan. I've had people get funded in those prop firms in their first 30 days with Nexgen by adherence to this plan. It's designed to optimize your chances of success with the high probability trend trade. What does that mean? That means this is the best of the best. And then through simulation, study, class feedback, continuous practice, guys, you're going to craft a plan tailored to your goals based on your ability to read the indicators, which means that once you begin to see things, once you start to recognize patterns, you're going to find more ways to make money with the software. You're going to find more entries. You're going to have a different management plan. But in the beginning, keep it very simple. Keep it very focused. And your simple plan for consistency, guys, it starts with don't fight the large chart. Remember, this is your large chart. This is the large crowd. This is groupthink. This is panic, mob mentality. And when it's going up and going up strong, guys, there's no reason to fight it. Don't fight those large triggers. Don't trade into those areas on the large chart. And if you can do that, you're like 70% better than most of the traders in the world. You've got this advantage through Nexgen to know exactly which direction they're going, if they're going that way strong, and if there's something in the way. Your entry is very mechanical. It's very if-then. If I have momentum, then I need a clear path. And if I have a clear path, well, then I'll look for an entry at an area inside of favorable large triggers. And then once you're in that trade, that's where the panic starts. Oil's going crazy. Remember, we do have crude oil inventories today, Pete, because of the holiday. Once you get into your trade, this is where most people pucker up because now there's something to lose. So remember that we're getting into a trade because of odds favorable momentum. And we're getting into a trade because we could define exactly where the market was most likely to continue. And that's where our limit order went. And we knew that our stop was beyond those trigger lines, 4 to 5 ticks where the market shouldn't go. And guys, this is where the first part of the KISS plan gets you to. And then it's time to manage. And if they don't get your stop, right, your stop's where the market shouldn't go, you're either going to get stopped out or it's going to give you a reversal bar. And this is straight from the KISS plan. If you get a reversal bar, this is your first stop movement, 2 ticks above it for a short trade, 2 ticks below it for a long trade. And at this point, here's the part that bums people out. There's nothing to do. You're either going to get stopped out or it's going to go to your first target, guys. You'll never be in control of what the market does. You'll never even know what the market's going to do, but you do know that you're in a trade that is based on a pattern that has been proven to win more than it loses. So as a brand new user, you're learning to trust that. You either get stopped out or it hits your first target. Your KISS plan first target, and guys, these pictures are in the spreadsheet for you, is only $100 in the distance. That's it. $100 from your entry. That $100 dries the sweat on your palms, and that $100 kills the butterflies in your gut. And that $100 creates confidence and trust in the methodology, and the $100 feels good. And when you hit that $100, you're going to go break even. You are going to go break even. You're going to have zero risk. And guys, that's not the best stop, but you'll craft a plan tailored to your ability, reading the indicators once you have the repetition down. That break even isn't always the best look, but that's your first look because you're learning to trust the large chart. You're learning to trust the idea that the only reason you're in this trade is because of momentum and a clear path. Or Pete, it's very possible that people with a lot of money are jockeying for position waiting for inventories. It could be anything, guys. I never try to figure out why the market's doing what it does. Your second target is only $200 from your entry, right? Your second target is $200 from the place where you got in. And if it hits your second target, you're going to exit. And you're going to say to yourself, guess what? I'm done. That's all. You just traded 1,000 lots. That's probably Jen. Stop manipulating the market. Remember when I talked about the big crowd? Jen is the big crowd. Guys, this $300 winner feels good. This $300 winner creates enormous amount of confidence, guys. And I want you to see something. If that $300 is the best you can do every day, that's $75,000 a year added to your bottom line. And guys, $300, you're going to find that once you start to get comfortable with the software, once you start to see that the plan does in fact work, that the advantages and the process leads to the results, you're going to say to yourself, $300 is not a difficult goal, and you're going to see the potential for well beyond that. But the one thing that you have to know, this is the final thing that I'm going to go through. The one thing that you have to know before you sit down to trade, when you get off simulator, guys, is why you're going to enter. The KISS plan gives you a very focused set of rules, and you have to know why you're going to exit. And the KISS plan gives you a very mechanical management plan. And you have to commit to those rules, and you have to learn those rules, and you have to stick to those rules. Because the rules have been proven to win more than they lose, and the rules have been designed to give you a statistical advantage. And the rules are the process, and the process yields results. And the rules are going to keep you from that emotional trading. You're going to become robotic. Either my rules are met or they're not, and you're going to do your best to keep the emotions out. So I just dropped all of those in the room, guys. The exit conditions, the daily goals, the KISS plan, all of that is in the room for you. You have my spreadsheet. You've got the checklist. You've got the 101. The only thing that I haven't given you is the repetition, right? Look at that. Giddy up, crude oil. But check it out, guys. How's this for kick-ass? Straight from resistance to support to resistance to support. Strong triggers break. Weak triggers right at the fib. There's our move down. Even when the market is ape shit. Guys, they know where these areas are. Isn't that amazing? With that momentum and the potential to break, there's my lowest point of resistance inside of favorable large triggers. Are they going to come get me, or are they going to go without me? What do you guys think? Yeah, look at all that. Isn't that nuts? Can you guys give me a why? I've got momentum. My path is almost clear. And there's my area inside of favorable large triggers. And if they hit me, my stop will be at 04, 5 ticks above. Oh, and they might not get me. Maybe I should have been 2 ticks below. Let's just see if it gets us. Will it? No, rats. Nope, here. Nope. Oh, there it is. And there's my stop where the market shouldn't go. And there's some emotional stuff going on. We'll see what happens. At this point, I've done everything I can do. And I'm hoping, good, that's what I wanted to see. And I want you to see why. Because my large triggers hadn't made it through the fib yet. Did everybody catch that? That the path wasn't clear yet? That it was only the potential to break? That's kind of what I was hoping would happen there. Which means that it was one of those 50-50 trades. Yes. And guys, the reason I did that, and I'm so glad that it lost, and I know that sounds weird, but I'm on simulator, because the area hadn't broken yet. The area hadn't broken yet. The large triggers didn't get below. And guys, this is the second trade on the KISS plan, and I want you to see something, how rule adherence is going to optimize your chances of success. So the first thing that my entry rules say when the area isn't broken is, am I coming from one of those termination conditions that created a full reversal, right? We learned about that one in the high probability trend trade. The answer is no, it didn't. My triggers broke through. Did I have odds favorable momentum on the large chart? I sure did. Did I have odds favorable momentum on the small chart? Not quite. But guys, this is the one that I wanted you to get out of this. No divergence on the 5-1. No loss of momentum on the 5-1. No indication that the market may be slowing down. Because guys, the whole basis for areas with the potential to break revolves around momentum. And we've already given up our clear path. Why on earth would we sacrifice momentum? Why on earth would we give up 66% of our advantages? And I love that that worked out the way it did, because the KISS plan would have kept you out of that loser. And divergence is such an important concept. And Steve, that was a good read on the weak top. that it reminds you before you ever get to management that you probably shouldn't be in that trade with divergence. And then it reminds you again in management that if divergence prints, exit that trade. And guys, the more often you see areas with the potential to break that don't break, divergence is involved. Even in markets, divergence off the low. Let's see if we can find another one. Potential to break at 718. Divergence. Once again, I'm telling you guys, the potential to break relies on momentum, so divergence. And that was about 5 examples of it. But again, that's why I give you the KISS plan, because my goal is that you win more than you lose. My goal is that you take the best of the best, that you develop that confidence so that you can move forward with it. Guys, are there any questions about the high probability trend trade? Are there any questions, and let's break it down individually, about momentum? Momentum is nothing more than a separation between the small and the large. Momentum is nothing more than that look where the scissors open, and once the scissors close, the momentum is gone. So commit this look to memory. I'll drop it in the room. And once you're good at momentum, and guys, most of you will be good with momentum in the first hour. You've got to go through the idea of whether or not the path is clear, if it's only the potential to break, or if it's just a termination condition. And you need to be able to recognize these in the moment. So once you have momentum, we're going to couple it with the clear path. So 2/3 right there. You and me both, man. I'm good at the bad habits. And then guys, once you have momentum, once you've defined a clear path, well then you've just got to either find your entry for a long trade or you find your entry for a short trade. So it's nothing more than 3 advantages. That's what creates a trade. So don't worry about whether there's a war in the Middle East, and don't worry about whether or not the orange juice crops froze over the winter, and don't stress yourself out about one divergence on a small chart. Keep it focused, keep it simple, keep it basic, and for the love of fuzzy, post in the room and tell me what you see. You don't have to be in a trade. So one of the things you new users could do literally right now is you could just take a picture. Watch this. Boom. Do I have odds favorable momentum? What do you think, VCP? Separation between the small and the large. They're wide. They're angled in the direction of the trend. Do I have momentum? Absolutely. Congratulations. Day 1, you've already picked it out. So let's go through it. Have I reached an area yet on the top of the bar? No area is reached. That's my first look. And then I look behind me. Have my triggers gotten through the fib? Have my triggers gotten through the 1-to-1? Not yet. This is one that takes a little practice. So I would say smalls are through the areas. Large or not, this, because of momentum, has the potential to break. Does that make sense, everybody? I didn't have to take a trade. I just identified momentum, committed it to memory, and now I'm recognizing that 50-50 look. And that means that if I get a reversal bar, well, the first thing I notice is divergence. Maybe this isn't my trade. I notice that my large and my synthetic are not one on top of the other. I don't have favorable large triggers. And guys, I've got one line inside of triggers all the way down here. So I'm just piecing the very basic concepts. And this is one of those trades as a brand new user might be worth skipping. And we'll see what happens with it. 2 correction points. It just made it to the second correction point. There's a reversal bar in the direction of momentum. Some of my more experienced users see that as an opportunity. What if we get a third divergence? Egads and little fishes, deal breaker. So guys, that's my first hour. Every day. It's the same hour. I'm a broken record. We talk about the rules. We talk about the looks. We talk about the advantages. We talk about the entries. We talk about stop placement. And now the second 2 hours are going to be you guys showing me what you learned. Showing me your charts, talking about your entries, talking about your exits, showing me your momentum, talking about that clear path, coming through, and we're just going to have a conversation. Thank you, Richard. Sometimes I worry that I bore you guys. I really do. And people ask me, how can you say the same thing every day? Guys, well, all I need is one question. And you guys have witnessed it in this room. I will try to say the same thing 20 different ways to make sure everybody gets it. All I need to know is what you need help with. Moose. It's just what I do. It's just what I do. And look at this. It didn't just run, did it? I'll be damned. Maybe you knew that wasn't your best look for the highest chance of success. Kind of cool, right? Rules for the win. Guys, I'll be back in 5 minutes. This is where I go stretch my legs because I firmly believe that you shouldn't sit in front of a computer for 10 hours straight. I don't think you should sit on your ass for 10 hours straight. Get up, walk away, do something else. But can we get like a hallelujah or something that divergence kills 50-50 trades? There it is again. There it is again. 90% of your day, ladies and gentlemen, 90% of your day is being patient. 10% is going to be capitalizing on the advantages provided. So I'll be back in 5 minutes. If you have a picture, post it. If you have a question, post it. And when I come back and we look at your pictures, we're going to talk about momentum, clear path, and entry. And that's it. And I won't judge you on your trades. I may ask some questions that make you uncomfortable. You may not agree with my critique. That's okay. If you don't, use your voice. Don't accept everything I say as the gospel truth. If you feel like you need to challenge me, challenge me. I actually enjoy that. Because then I go to my wife later and I'm like, challenge me, teach him something about something. Not really. I don't do that. I'll see you guys in 5 minutes. I'm going to go pet my dog and refill my water. Guys, let's get back into it. So I'm going to scroll up to the very top of the chat box, and I want you guys to see what I'm doing if you're brand new. I've got to go all the way up to the top to find the pictures that were posted, which means that there is the potential that I will miss your question. And it's not intentional, and it's not because I hate you. It's because just sometimes I get lost in 2 hours worth of chat. Every chart that I look at, I'm going to go back to in terms of momentum, clear path, and an entry area. And then Joel's doing playback, and he got us going. He put these in last night. I like it. Hanging out, doing some playback. Odds favorable, momentum, clear path. Did a great job labeling the advantages. And from those advantages, nice job, Rob. He takes a pullback directly to support inside of favorable large triggers. He knows exactly where his stop needs to be. And he starts getting close and he gets paid. And Joel, what a beautiful trade. Nice job. Momentum, clear path, room to make money. Even the trades that fail, what you'll find is that with that momentum, sometimes you can salvage a little something out of it. So here is termination that reverses the market. There's that good top that we're looking for. Odds favorable, momentum. Everything says down with momentum. One divergence can be problematic, right? You said there was no divergence, but there was. And that's okay. And I don't know why you changed that to the 13.2, Joel. Was that intentional? Did you do that so that you could trade divergence on the small charts? Or is this a checklist for a NASDAQ market? Because you've got divergence, no trade, and then you've got divergence on the 13.2. And divergence on the small chart is problematic. But you get in with the perfect entry, the correct stop, and you get paid before things change. Just curious about the 13.2 amendment there. Because you won't see divergence on a 13.2 until 3 bars up. No worries. Just wanted to make sure. Once again, odds favorable, potential to break, no divergence. You get in right at the top of the window. Beautiful. You're able to make down divergence prints, and there it is. No worries. I'm assuming that's probably from your NASDAQ, and it looks exactly, yeah, that says 34.5. So it's the same concept. You know the rules. Just different time frames. Great trading on these, Joe. And then here we had odds favorable and a clear path, and you take the entry. And my only concern on this one when I saw it, Joel, is why did you hold that one so long? Why were you willing to risk 6 points, 7 points? You got a reversal bar in the direction of the trade. And man, it came down below everything. It changed trend. It gave lower divergences. The large triggers were down. Odds favorable, momentum, wrong side of everything. And you held this trade. And this is one of the things with playback as well. If you're doing market replay, guys, and you remember that the market went up, you'll do some asinine stuff. And no offense, Joel, half asleep, right? But I've seen your trading plan. I've seen your stops. This isn't it. And you changed your plan a little bit, whether you're a little sleepy, not focused on it. It was a beautiful trade, and it would have been a small loss. And then once it's done sorting out, everything turns green again. Maybe there's an opportunity to get back in. But when I see this amount of risk on trades, guys, it's concerning. Because this is how accounts get blown out. Let me just make my stop bigger mentality. It doesn't pay dividends, and we've all done it. So, Joel, you're definitely not alone. We've all done it. It's better to take your hickey and wait for the next best one, in my opinion. And then, Pete, we talked about this, and this is just a good lesson for everybody. Does this affect the 3 divergences at the line's end? So, Pete, the question was, hey, Mark, if that line ends, do I need to not worry about that divergence anymore, right? And the answer is no. It ends when the new one is true, but we're looking for them in the same price range on that small chart. So they're still very valid, but you'll notice that this line quits printing when this line does on that third bar. But that's an awesome question because that's one of those things. And then once you get the pivot down here, you'll notice that this one stops printing as well. And up here, it never had the news. Oh, Joe, you bet. You're killing it, dude. You're killing it. I've never met anybody that doesn't incorporate just a little bit of emotion every now and then. Even some of the most solid traders I've ever met, we all have the potential to make decisions on the fly. And I like this one, guys. And this is, I wanted to see everybody take this one. Odds favorable, clear path, perfect entry, didn't work. Odds favorable, clear path, perfect entry, didn't work. And guys, sometimes the market is a jerk. And sometimes the market will stop you out to the tick and then do everything that the large chart said that it was going to do. And this is where I asked people, and then Gino did the same thing, right? Odds favorable, clear path, perfect entry. He liked this look so much that he added on. I don't disagree. And guys, everybody took the same trade because this is a trade that wins more than it loses. This is a trade that has all the advantages and everything that we look for. And anything that wins 70 to 80% of the time is going to lose 20 to 30% of the time. And I posted the question in the room. And let me go back and let me find the picture. And the question that I posted was, with that look, with this large chart look, with that best of the best, highest probability look on the large chart, could you use a confirmation in the direction of the trade to re-enter? Could you say, my large chart rules are met, they're amazing, it's the best look ever, but they got me. With a reversal bar, can I re-enter that trade? And guys, some people will take second chances. Some people won't. I am not opposed to it. If I take this trade and I get stopped out and it looks like this and it's the best freaking look ever, I don't mind getting in with a reversal bar. I don't mind taking it twice because sometimes you will have to take trades twice. Sometimes you're going to have to. And it's just a part of trading, guys. We're good, but we're not always down to the tick good. And then Rob posted this on news. All this happened in a couple of seconds. Amen. Isn't that nuts? That's why we check news every morning. Rob, I meant to click on this one when we were checking news, but I'm telling you. And Rob said he went and grabbed an egg. He's like, I'm not trading in that nonsense. That's ridiculous. What a good decision. Nicely done, guys. Erla says, Mark, there's this thing I'm doing where when everything says down and the path is clear, I kind of do a little jump in thing. And Erla says, Mark, this isn't my first rodeo. I know that if a momentum style trade fails, when the large chart says everything's doing what it's supposed to do, very often it turns into a trend trade. And that's exactly what this one did. And Erla rides it down. And then when he gets divergence and weak triggers, says, I'll get out of there. My goal is to get paid. I love this. And then VCP, that's what a momentum trade looks like. When everything is down, a momentum trade is literally the potential for areas to break, using that momentum, getting in right around 1-to-1s or a fib, and just letting momentum carry you down. So it's a different look. And it's one that you'll begin to recognize as you grow with the software and see things a little bit more. And then Andy, everything says down. And then there it is again, VCP. Momentum. And what Andy's doing, he's saying with all this momentum, I'm going to take a quick little snapback and ride that momentum down and make some money. And they take a little bit of time to learn how to time them. But the more time you spend in front of the market, the easier it is. And then what you'll find too is that people love to give me heartburn, and Ron loves this one. And guys, I want to do this. I want to make sure that I say this. Don't be the trade police. When you see people posting trades that don't fit your rules, don't be the trade police. Understand that this is a pattern that Ron studied for a long time. This is a pattern that he simulated for a long time. This is a pattern that he verified that he could win more than it loses. And you'll notice that it fights the trend of the large chart, and it fights the momentum on the large chart. But it uses some small chart patterns where he's found out how to capitalize on these tiny little moves, these little fluctuations, and it's brilliant. What is the white bar? He meant the reversal bar marker, Paul. The reversal bar marker. It's down here now after the fact. But the reversal bar marker is his target. It's an awesome trade. It's an advanced trade. It's a, hey, I've got some experience. I've been reading indicators for a while trade. Nicely done. Pirate Ron. And then, so, Rob, did you get my question too? It can be yellow or white. It doesn't matter. You could make it bright pink if you wanted to, Paul. As long as you know that it's the reversal bar marker. Rob, did you get my question? Why are you running synthetics on the large chart? Something looks off there. It looks like you have two small charts. So do me a favor. If it still looks like that, right click on your large chart, go to templates, and load the Nexgen 13.2 Renko bar chart. Because I think what you have is the NASDAQ 13.2 dynamic Renko bar chart. And since that's an entry chart for NASDAQ, it has those synthetic triggers. And the one that you needed was the Nexgen 13.2 Renko bar, not the one that says NQ. And that'll get those synthetics off there because that creates a little odd look. And then, of course, the question that I posted is that if you have momentum, where did you see odds favorable momentum, though? I see large triggers down, small triggers up. Over here, it looks a little more like momentum. No clear path. Just that patience piece. But I would be interested to see where you saw the odds favorable momentum on the large chart, because I can't see it. And maybe there's something that we could clear up. Andy Man. No. See, you're just annotating charts, but what good does saying that you have momentum do for you if it's not there? Does that make sense? That's like walking outside and going, man, the sky sure is green today. Well, no, it's not. We're like, yeah, I'm just describing things. It's cool. Does that make sense? I suck at analogies. Novak men are horrible with analogies. Aim for truth in your annotations because you're using these annotations to study. Andy, that was your short. And then everything rolls and you get that momentum and you jump in the middle of everything. And you're able to get paid. Nicely done. Once those triggers split, you don't know where it's going to go. And you had to keep a little bit of risk on there. But it worked out with that level of momentum. Nice one, Andy. I'm glad you can hear me now, too. Little unorthodox. Little chart that says, hey, I've been doing this for a while. I found different ways to take advantage of it. I love seeing that. Warm-up trade, sim. I love it. Man. This is brilliant, Pete. So Pete says, I'm losing my momentum. They're separated, but it's weakening. But this is what's brilliant, and I love this. So Pete's area was on the wrong side of the triggers. And Pete, did this come into play on your decision? Area's on the wrong side of the triggers, which means he doesn't know how far down it's going to go. Rule number 3, area's inside of triggers. So what Pete says is, hey, you know what? Let me get my small triggers heading the right direction, and then I'll enter the market. Let me give it a second to sort out, and then I'll get in when the small triggers roll. What a great entry, and then just right up to resistance. I really like that trade, Pete. I love your patience on it. If it's not perfect, you don't have to enter the market. I think we forget that in the moment sometimes. Guys, this is your money, right? This is your investment. Had the idea that oil wanted to go to this fib. You tried 3 times and gave up, probably. So let's look at it. That was the one that everyone took. You entered, and you got paid on the right side of things, waited for it to sort out. And then you tried to enter again and got out at the top. Yeah, they're just dancing, man. The fact that you didn't lose any money in that mess, though, Jonathan, nicely done. Andy says, when it works, I worry, was I just lucky? When it doesn't work, I worry what I did wrong. So tell me, Andy, do you think writing rules, actually writing on the chart that you had the advantages you need for a pattern that wins more than it loses, you'd never have to worry about that, would you? All right. Mr. Flowers, are you with me? Cool. So, large chart momentum is outstanding, isn't it? I love that look. Look at that. And then price trades directly into yellow 1-to-1s, and price trades directly into Fibonacci resistance. And that was such a significant line that it gave 3 divergences in the same price range right off of a termination condition. Do you see it? Cool. And you said, F it, I'm going long anyway. And you made money. And that's okay, right? It's your trade, not my trade. But anytime I see something like this, and guys, I don't judge you on your trades. I encourage you to scroll back and just see how many times these lines stop the market. I encourage you to scroll back and see how many times termination conditions win. Because if you did that study, if you honest to goodness did that study, you would have difficulty trading into termination conditions. And you would have even more difficulty trading into termination conditions with divergences against you. And you would have even more difficulty trading into termination conditions with divergences against you with big, ugly split triggers. So, Paul, I'm glad that you got paid. I'm glad that you got paid. You think the large crowd knew something when they ran oil up to 70.58 after retracing half the move? It's right back up there again. So you're saying a 50% retracement off the high? Well, because, Paul, you're looking for trades, brother. You're not looking for rules. Does that make sense? Damn near 50% to the tick, huh, Pete? And Paul, this is why I encourage people. But the 3 divergences, you should have never even looked at your small chart. You were trading directly into a termination condition. 2 termination conditions, right? And not only was it 2 termination conditions, and I swear I'm not beating you up because love you all. You're coming from a bad bottom too. And I'm not afraid to tell you guys that you got lucky. I want you here forever. And I guess my question would be, and what time was that? 9:01. What kept you out of these, right? And what kept you out of these ones with the potential to break? And is it because you didn't make any money going down that you felt compelled to get in because you felt like you were missing out a little bit, like they were just leaving you in the dirt? I see it a lot. I've done it myself. I watch the market go up and down and my brain starts going, dude, everyone's getting paid but you. What's going on? You were talking to your wife? Well, you know what? If she still talks to you, that's awesome. I love it. You just didn't have a lot of room. And I'm not mad at you for it, right? But I want you guys to know what you're up against when you get into a trade. So, Paul, the thing that I would want you to take from this is that trading into a termination condition, especially like this, you know you have to manage aggressively, right? You know you've got to manage aggressively because it's just not a high probability trade. It doesn't mean that it's not a trade. But every time I'm looking for a trade, and let's go through it. I'm just going to walk you guys through what I do. I ask myself, do I have odds favorable momentum? And I'm obligated to say no. And then I just say, do I have a clear path? And I'm obligated to say yes. And I say, do I have areas inside of favorable large triggers? Well, maybe I have a fib right here, but without the momentum, it might push lower, right? So maybe I need a reversal bar to get in. But my brain never changes, and I go through this very constant pattern every time. Do I have momentum? And if the answer is no, very often I don't worry about it. And then I'll literally ask myself, did price reach a line? Nope. Cool. Did the triggers clear the previous line? Yes. Awesome. Clear path. I've got one line right on top of the triggers here. So if I said to myself, you know what? I'll take that entry. I have to know that with this loss of momentum, it may push lower. It's not high probability anymore. Does that make sense? And if you don't have that fib, Pete, then you're just floating in the distance a little bit. So I've really trained myself, and it's like this order of operations every time. Let's type it out. Sometimes seeing it typed out helps people, I think. When I open my charts, what direction is the market moving, right? I decide right off, is it up or down? So I know which way I should be trading. And then I go straight into, do I have momentum? Yes. Go to rule number 2. No. Go get a sandwich. Because in the beginning, I'm really trying to get another. But you still had a fib, right? And then if it's yes, and I don't ask, do I have a clear path? I ask, has price reached an area? Because that's the recipe for a termination condition. Has price reached an area? And if it's no, have my triggers cleared the previous area? And that's exactly what I do. Has price reached an area? The answer is no. Okay, then I got to make sure that they've gotten above the other one. And if the answer is yes, then I look for an entry. But this is my thought process. Every time I look at a chart, guys, every time I open a chart to look for a trade, I say to myself, do I have momentum? Where's the path? And Paul, we all have things that we don't recognize in the moment, right? You might be so amped up on an entry that you miss a divergence on a 50-50, and that's normal. That's part of it. But that's where you have to go back through annotation and say, let me analyze this. Let me see what I did wrong. Let me see what wasn't the best of the best scenario. So, if you got in here, you'd have to look at it. Well, I didn't have a clear path, right? And if I don't have a clear path, it's medium probability. It just didn't work. And that's okay. And here you have to go back after the fact and say, oh man, there was divergence on a 50-50. And what we're witnessing right now, bad top, didn't make it. Bad top, didn't make it. Buyers are shooting for that fib, guys. They're looking for that fib. They know where it's at. So it's okay to make mistakes, and it's okay to not see everything in the moment. But this is why I think annotation pays such huge dividends, because it allows you to come back and look at your trades. It allows you to come back and say, all right, what did I do? What was I thinking? Where was I going with this one, right? So Paul, your annotation, you could come back and you could say, hey, I traded directly into a termination condition. I have to be aware of this. This is my thing. And Paul, that was my thing. And it took me a long time to grow out of that thing. And it took my brother finally asking me, Mark, how many times are you going to trade into these damn lines, hoping that they break and getting your ass kicked before you stop doing it? True story. Verbatim. That's exactly what he said. Because this, Paul, was my biggest reason for losing. And to be honest with you, that is still, if I have a bad day, if I have an opinion-filled day, trading in determination conditions is what whips my butt more often than not. So the fact that you're posting and accepting the conversation, we'll fix it. You'll fix it. But you have to hear it, right? You have to know that it's going on. And if you don't know that it's going on, then why on earth would you fix it? Especially if you win. Awesome. And then there's a good example, right? Odds favorable, not quite separated. No clear path, traded into a term. Where was the potential to break though, Joel? That's not a 50-50. That's a termination condition the way we teach it every morning, right? 100%. So Paul, same idea. If you convince yourself that there's the potential to break there, not because your indicators say, but because you really want that thing to break so that you can make money going long, potential to break turns into what should really say, gosh, I really hope this termination condition doesn't work. And the entry's perfect. Area right there at the triggers, but without rule number 2. So guys like Moose and VCP, as you're brand new with the software, these are important lessons because we're watching a lot of losers happening without rules being met. And guys, there's ways to trade in determination conditions. There are. But it stopped the market cold here, and it killed that long trade there. So more often than not, it's not going to work out for you. That's why it's a rule. That's what made it a rule. So, Joel, the potential to break, and let's go back to a picture because I believe every time a chart is misannotated, we need to go through and have the conversation about what it means to have that potential. And I'll use this picture, right? Small's above the large, large below with odds favorable momentum. Guys, this is your look. It's that crazy strong small trigger smash through. That's the potential to break. And if you compare that look, and let's do this. And this is what I do when I learn stuff. This is what it looks like to have the potential to break. Well, I have to go back and I have to compare it to what I see here. Whoops. And I have to say to myself, you know, is that the same look? Take care, Christine. Does that make sense? Is this look that look? It's really not. It's very different. But in the moment, in the heat of battle, when the emotions are flaring, the anxiety's up there, and all you want is to be... you did great. Your annotation was great, Joel. You told me exactly what you saw, but what raises a flag for me is that you said trade it into a termination condition, but then you called it the potential to break. Do you see how that's a conflicting view? Because a termination condition says absolutely no trades into that area. It's likely to reverse the market. But rather than saying likely to reverse the market, you chose to call it the potential to break. And I think potential is the key word there. It's not. It's the hope. You mistook hope for potential because potential means that the small triggers have absolutely smashed through the area. Does that make sense? So I think you annotated beautifully. You told me exactly what you saw and what it meant to you. And that's all we need. It doesn't have to ever be correct. Your annotations, guys, never have to be correct. But you have to expect the lesson that comes with it if it doesn't make sense. Odds favorable momentum is a separation between the small and the large. There's no separation. Potential to break is smalls breaking through the area with odds favorable momentum. This is why learning the very basic language on the key concepts pays huge dividends as you go down the road, guys, because it allows you to police yourself. Let's see where we're at. Let's go to this. I hope that makes sense. All right, when Jen's not manipulating the market, what is she doing? She says, odds favorable, everything is screaming, let me get in on the correct side and let me get paid all the way down. Nicely done, Jen. Is it a high probability trend trade? Absolutely not. What is it? It's relying on momentum and that potential to break and using momentum to carry to the next area. Told you guys there were plans built around that. Odds favorable, wait for it to clear the fib. She goes long, she gets paid. Oh. Nicely done, Christine. That's the perfect momentum entry right there. 69.80. She lets it clear the fib, almost. She's trading the potential to break. Oil inventories in 5 minutes, guys. Let me know when it's like 1 minute, and I'll open up crude oil and we'll take a look at it and see if it jumps and bumps and spikes. And then Joel, perfect, broke rules, divergence on a 50-50. It's okay. Losers aren't a bad thing. Losers aren't a negative. As long as you can go back and go, oh, the rules said this, but I did that. That may have contributed to my loss. Great job, Joel. And then Rob, we already saw that one. And we saw that one. Very nice. Morgan. Odds favorable, no divergence, perfect entry, didn't work. And I think that's that was a time frame thing. Strong top, that's a good look. That's a good look, Morgan, didn't work. And clear path since it's not NASDAQ, yeah. Just didn't go, man. And when you took that trade, these looked very much like they were getting wide and open. There's no doubt in my mind. They didn't bend back up until about right here. But for class purposes, well, Let me look at your annotation. Let me see. Hold on. Strong triggers? Yes. Why did you put clear path over here? Large chart, right? Didn't hit anything. Cleared previous. That's a great look on the large chart. And you took the entry 2 ticks below the mid band inside of the triggers. Can anybody find anything wrong with this trade, even though it lost? If we go back to the basics, Morgan, does it fit what we look for the high probability trend trade? This goes back to where Andy was saying, if it wins, I wonder if I got lucky. If I lose, I wonder what I did wrong. I can't find anything wrong with your trade, Morgan. I can't find anywhere that you broke a rule or sacrificed an advantage, which means that there's absolutely no reason for me to hesitate putting this into a trade that I'd want people to study. It was, maybe we should do a lesson on that. Pete, let me give you my 2 cents on that. And tell me what you think about it. Don't just accept it as the truth. Tell me what you think about it. I appreciate feedback. Here we go. 2 minutes, Gary. Thank you. So, Pete, we know through patterns that this is a correction point, right? Let's make it shaded. And this is a correction point. This is where we expect price to return to, guys. This is why we look for lines inside of triggers. If I have a line riding the line on that trigger, I'm right before the correction point. Take that trade all day long. You know where your stop goes. If my line is on the wrong side of that trigger, who knows where it's going? So, Pete, this one riding that line, I'm very comfortable with. Yeah, well, he put it 2 ticks below the area inside of triggers, right? Textbook. So his entry wasn't in the triggers, but his area that he was trading from was, and he was 2 ticks below, so we didn't miss the trade. I like it. Does that make sense? All right, let's see if crude oil inventories does anything. What do you guys think? Are they going to get the fibs? You would have. Because of the split triggers? That was a little pop, right? Are they going to get that fib, guys? Have they been trying to get that fib for the last 3 hours? Oh, here's our line in the sand. We're going to find out. Man, that wasn't a big reaction, was it? And Pete, I don't disagree with you. When my triggers split, I like a reversal bar. That's just me. When it's not favorable large triggers, I personally prefer a reversal bar. That was pretty lackluster, wasn't it? That was a pretty weak reaction. But it doesn't change that he followed the rules. All right, Rob. The beginning of momentum coming off of a termination, and you take the pullback to the mid-band right inside of the triggers. Stop where the market shouldn't go. How'd that one turn out, Rob? That was your winner, right? At 10.17? You said you won. So there it was right there, and I think you said you made $62. I would be curious to find out why it was only $62. Because that thing didn't blink until all the way up there. So now you have to ask yourself why you jumped ship a little early. Everything says up, the path is clear, the entry is great, the exit is quick, the money is simple. Odds favorable and a clear path. Thank you, Ron C., for this trade. Gary, man, it's been a while. I haven't had a post from you. I can't tell where you got in. You went short off the termination and you got out at trouble and you let one run all the way down to the bottom. Looks like a beautiful trade. Nicely done, Gary. Trading the idea that when the market stops at a termination, you can find an opportunity on a smaller chart, and down it goes. Nicely done. And guys, we made it through all the pictures. Good job. Couple good lessons in there. I guess they weren't going to make it, huh? And now I've got momentum, and now I've got a clear path. And if I get a reversal bar, guys, my rules say that my entry is about 2 ticks below the lowest point of resistance inside of favorable large triggers. And I was 1 tick. There we go. Stop where the market shouldn't go. There's 100. There's 200. There's my reversal bar. Reduce my risk. 100% KISS plan, right? Ooh, and they stopped. They're making decisions. There's my first target. KISS plan says go break even. Second target is at $200, and they're either going to stop me out or they're going to hit my second target. Did you guys see how quickly that read happened? Odds favorable, clear path. Entry at the area inside of favorable large triggers. And guys, this is 100% KISS plan. I'm either going to get stopped out or I'm going to get paid $200. VCP, do you see it? Moose? Marcus? Guys, this is what we talked about for the first hour. 100% live in front of you. I don't know if it's going to win or lose, but with that much momentum, I already put $100 in the bank. And I got nothing to lose. Hell, I'm going to go walk the dog. 100 and 200, Paul. KISS plan. That's it. 100 and 200. I already made 100. I put them at 100 and 200. I was in at 41. I got paid at 31. Then I went break even, and I'm out break even. There we go. Not on this one that I had set up. I do have a KISS plan ATM, but it wasn't in there. They were set at 20 and 30, 200 and 300. But that was it. Guys, that was the KISS plan. 100%. That was it. It's what I teach every day. I didn't form an opinion, right? I didn't hope or wish. All I did was follow the rules. And it resulted in $100 for me. How cool is that? And now I just have to wait for the next trade. Honestly, it pulled right back to a mid-band inside of favorable large triggers. Yeah, Paul, I'm pretty speedy on this stuff. So now let's ask ourselves, if we're not trading the KISS plan, does the large chart have odds favorable momentum? Absolutely. Does the large chart have a clear path? Absolutely. Did the large chart pull right back to a mid-band inside of the triggers? Absolutely. Guess what, guys? You could defend that entry in a court of law. But because this is a learning environment, I followed the KISS plan. Remember when I told you that break even is probably not your best choice? With this look on the chart, you couldn't pay me to go break even. Hell, I would probably add on to this position. But this was your KISS plan, and all it was $100, and that was the best of the best. That was the one that's designed to optimize your chances of success. And Morgan, you said it best. $100 is $100. And if that's the best I could do every day, guys, that's an extra 25 grand in my account at the end of the year. Everything says down. The path is clear. The momentum is strong, right? The large chart says we're going down. The small chart says, hey, Mark, look at fluctuations. This happens. This is a normal part of it. You got to do this real quick. In this one bar, guys, all of this happened. In this one bar, every bit of this happened. That's why we use the refinement chart. And you're absolutely right. No one ever went broke taking profits. And then some people say, with everything going down, in a clear path, they'll just jump in, right? And see if momentum carries. Does that look familiar? Have we seen that one a couple times today? Look, let's just take $100, right? Why not? Let's put another one right there. Let's get to break even. It doesn't matter, guys. All we're doing is simulating and we're practicing and we're trying new things. I think the actual chili dog exit is somewhere around here. And break even way too fast. But guys, there's a million ways once you recognize momentum. Once you understand path, you can begin to look for opportunities. VCP, go to your search bar and type in tech or TechSmith. When you download the software, this is downloaded onto your computer, the TechSmith Capture. That's what you have. I use Snagit, which is TechSmith's higher end. So this is the Jing tool. It used to be called Jing. Now it's just TechSmith Capture. That's the one that's downloaded on your computer when you get the software. And then Snagit is the one with all the bells and whistles. Nice, Pete. So guys, Pete took the trade with the reversal bar right here and made $250. Nicely done. And Ron's just rolling over disgusted with me that I went break even where I did. 500. Well, you said 25 ticks, right? Pete, I can't guess how many contracts you're trading. I'm pretty in tune. I'm not that in tune. What about that? Right back to the mid band, right? Inside of triggers. Clear path, tail into momentum. Does that one fit the rules? Momentum, clear path, pull back to the mid band inside of triggers. Does that one work? Could we defend that in a court of law? What do you think? Is it going to work? Hell, I don't know. But if I wrote my rules on the chart, the smalls are below the large. The trend is down. The path is clear. The entry, well, the entry was actually a little low. Should have been a little closer to the mid-band. Stops where the market shouldn't go. And I've got to make $100 so I can go break even. Or I need a reversal bar so I can minimize my risk. Or I need the small crowd to push up and take me out. And this is the part, this freaks people out. I'm down 60, right? Oh, I'm down 80, I'm down 100. You start watching those numbers. I'm still inside the triggers, right? Oh, here we go. It got me. No big deal. That was a great look. Didn't work, but that was a great look. That's a look that wins more than it loses. VCP, I love it. Sold 39, out 31. Dig it. So did you see the annotation tools on that capture where you can write on the chart? And I know this is day one, and man, this is so cool. So 1, 2, 1, 2. So you were in right about here. And you had odds favorable momentum. So let me do that. Let me take a picture. Are you using the capture? Using the capture software? Cool. So let me use the capture software. And I'll take a picture of your picture and I'll show you some of the cool little bells and whistles too. So click capture, right? You can do this. I love that you gave me both charts. And we capture it. And up at the top here, there's some cool stuff that you can use. So there's the shape. All of it's click and drag. So left click and drag, you can make big box, little box. There's arrows, right, coming through. And then there's the call out box. And I think this is the most important. So where you're at, you had odds favorable momentum. But the one thing is where you entered, and you can see it on both charts, it was directly into a fib. So no room to target is kind of what you run into there. Does that make sense? And I know that you're just getting a hold on things right now. So right into that fib, and you're just like, oh man. And I think the lesson that I want you to get here, because it's so important, is momentum literally pushes that market through the fib, right? So even though maybe this wasn't the most ideal, momentum is pushing it, and you get paid. And then once you get to the wrong side of those small triggers, that's right here. Look at that tail. And I believe that is the tail that came back that got us into that trade. So great job trading with direction, trading with momentum, right? And then eventually it runs out. I want to see what time zone you're in. Is that a 10? 10:02, 11:02. So you're in Central. I'm in Central too. I'm in North Texas. One of the things is we won't line up if our time zones aren't the same because we have a different midnight. So your software is going to measure an entire hour's worth of swings that mine isn't because we're in a different time zone. So if you want us to line up, if you want your charts to look like mine, like if that gives you a little warm fuzzy, and it does some people, you'll need to switch your computer to Eastern. It's not mandatory, but just don't freak out if we don't look exactly the same. If you do switch your computer to Eastern, it will make your software violate, and you'll have to get with Jason to rerun it. And they made the fib. They certainly danced, but they ultimately made the fib. And this is where management comes in, guys. This is where management makes it a little easier. Is you can take a trade that doesn't go the distance and still get paid and not lose and look for another entry and go. And we did a lot of nonsense in here, but it's kind of fun to do. It's just a time index issue to talk about the charts. I'm not completely sure what that means. So let me see, and this is either going to answer your question or it's not, and I'm not sure. I'm going to hope that it is. So when you open up your charts, nope, none of those pullbacks affected large sharp momentum, Pete. Thank you for putting that in there. So what happens when you open your charts, VCP, is it measures every swing in the market starting at midnight 10 days back. Yeah, exactly. So if yours says 10:02, on my chart it would say 11:02. And that's okay. Those are easy to find. But when your software calculates fibs, and it will violate, so you will want to get with Jason. If I go back to midnight on my chart, so just for example, and there's not a lot of swings in there, so let me do it on a small chart because your software goes on all the time frames, and it even creates synthetic ones to get the most accuracy. But right at midnight, boom, boom, and it's not much, but it's 3 or 4 different swings. Hi, Erla. That'll go into your calculations that aren't in my calculations. And when you compound these 3 little swings over 10 days back, when you compound those little swings over higher time frames, synthetic time frames, stuff like that, I'm 10 days back. So it's going back 10 days and measuring every swing in the market. But the cool thing is, and as I had no idea my brother was this smart, is it doesn't just go back 10 days. It creates higher time frames synthetically, and it starts to measure those swings, and it creates lower time frames, and it projects forward, and it goes backward, and there's thousands of calculations that come into creating these Fibonacci areas, and they all start at midnight 10 days back. And the algorithm took a long time to get right. But when my brother was creating the software, he had a friend in the pits in Chicago, and that guy's job, his whole job was to know where the institutions were buying and selling, what their key numbers were. And of course, he couldn't tell John what their numbers were or who it was, but John would send him his fibs as the algorithm began to get close and say, hey, how far off am I? And he got to the point to where he was within about 50 cents typically of the institutional numbers, their preset numbers. And that's when he knew. That's when he knew that it was time to bring Nexgen to the world. That he had exactly what he was working to do. So that's why, for consistency and fibs, the midnight makes a difference, guys. But whether your fibs are central time frame, mountain, doesn't matter. It is what it is. Wow. Oh, that's way back. But look at that huge move down and right to a fib. And look at that move down and right to the fib. And you can see the indecision going through. And then Pete made the great all of this didn't affect the look on the large chart. Erla, did that answer your question? 10 days back, good. With all of this indecision and fight on the small chart, the large chart always said down. Kind of cool, right? That's why we let the large chart lead the way, guys. And that's why you got to try to not get caught up in those little fluctuations on the small chart. And it takes a while because once you're in a trade, all you do is you focus on those ticks going up and down. It'll drive you nuts. It'll drive you nuts. I did, Ron, at 11:02, but let's go through it. Let's get your ego where it needs to be, right? Actually, no, I don't know if I did get this one. I love it, though. Price clears trouble. Everything says down. And he just takes a quick little shot here. No, this is good. I actually did miss this one, Ron. But I think it's important that you hear that you're good at this. Clear path. Everything says down. Room to the target. Make your money. Guys, it doesn't have to be a home run. It never has to be a home run. Base hits, and then I always bring it up, and VCP and Moose, you guys haven't heard this yet. Have you seen Moneyball with Brad Pitt? Where the whole premise is get on base? I think day trading is a lot like it. Four single last week. Oh, we could hang out. I've seen that movie so many times. But base hits are the easiest way to get to where you want to be, in my experience. Small, manageable, quick goals before the market gets a chance to change their mind. And there are times when you can hold bigger, and when Pete is able to post, you'll see Pete holds for some great trades, big moves, relying on the large chart stuff. But in the beginning, just getting paid, right? That's what, $450, give or take, 11 seconds. Beautiful. And then Pete said, yeah, Pete, your management's great. And Pete said it at 11:21. There's no need to even open the small chart until you have the look on the large chart. And what it does is it keeps you from feeling like you're missing out. Yeah, that was Ron. See, so what Ron did here, this is it, VCP. He says, let me get below all the things that could create a problem. And if I have room to get to the next problem and everything is moving strong, he just takes a quick hit. Boop, boop. $110 profit. I don't even teach this trade. This is Ron's trade. I've studied it. I've messed it up 1,000 times. I've created a plan for myself for it. But I don't teach this trade. Because if you don't understand momentum, if you don't understand clear path, if you're not in sync with the market a little bit, as simple as this trade looks, it's actually a lot harder to pull off than people give it credit for. But once you get it, Steve Diego, odds favorable, room to the target, just jump in, JTFI. I got the class swearing. Takes one off at trouble, but with all the momentum, he says, let's see how far it runs, and grabs some more. What an awesome trade, Steve. 2 trades, 990, 100% winners. Enough for today. Go live life, man. Have a great one. And then, Steve, you get in on the way to trouble. Get out at trouble. Let trouble clear. Get in. Get out. Get out. What a concept, right? And VCP, this is why I say once you understand momentum in these potentially problematic areas, you'll find a way to make money. You'll find a way to get paid. And once you understand what kind of trade you're in, you'll understand whether it should be held for the home run or whether it's a base hit. And it's just repetition. That's all it is. It's just repetition over and over. Doing the same thing, getting good at it. And the market almost slows down. The more you see the same patterns, it's like the market it's like molasses in January. Base hits are good. I love it. I like that mentality. So in the beginning, learn how to do it easy, right? Learn how to find the easy trades. And then once you can find the easy trades, you're just going to start seeing stuff. Yeah, there wasn't enough room. I agree 100%, Steve. But I was trying to make the momentum case for you. That one was a little quick. But Steve, can we go through the other half of it? When you have a strong top and this level of momentum, sometimes you can fudge a little bit. Sometimes you can say there's not really enough room. I'll get to break even. Take care, Ron. I'm working with a buddy of mine on the same stuff, on that style trade. And I have to do that. One of the things that you have to do when you learn something new is you have to understand when it's perfect and when it's not perfect. And when you know the difference between the two, you know whether or not you have to manage aggressively or if you can be a little loose with things. And that comes through repetition. That's the part that I can't give you. And I think the great thing is this was garbage all the way up before news. And then it got easy. 95% of your day, guys. is sitting tight and doing nothing. And it was worth the wait, right, Steve? I think it was. 2 trades for Ron. Guys, it's 11:30 in the morning Eastern. 2 trades. Just under $1,000. Is it worth the wait? Of course it is. If you're taking 30 trades a day, you're probably breaking rules. If you're taking 20 trades a day, you might be breaking rules. Unless you're at a point in your trading where you've got 2 or 3 different trades, and then you might be following rules. But as a brand new user, more trades doesn't always mean better. My best days come on the fewest amount of trades. All right, guys, we got about 30 minutes. He loves his mom. I'm going to do a mom tattoo on him if he'll let me. I don't think he will. And then was it Pete calls it Big Mo for the momentum? Guys, there's a reason it's the first rule. And it's not by accident that that's what we talk about in the beginning, that we talk about momentum being, in my opinion, the most important advantage. Because this is the one that covers mistakes. This is the one that breaks areas. This is the one that sets you up. You know, Paul Flowers, yours was a great example. You traded directly into a termination condition. But the momentum was so strong on the large chart that they went right back up and they retested it. It's like a freight train. It's hard to stop. And then when there's nothing in the way and you have that level of momentum, it's a freight train downhill with a tailwind. It's even harder to stop. So, good stuff. What do you guys want to talk about? Who are my other new folks? And VCP, you totally get a gold star. I appreciate that you'll post. I appreciate that you'll ask questions. The best classes I've ever taught have come from people asking questions that maybe I wasn't even ready for, or that forced me to think about things a different way, to teach it a different way. So I love it. And I think I disconnected. You're a racing instructor? What kind of instructor? What sort of racing? I'm locked up. What a cool gig. Cars? I've got to kill my ninja, guys. I froze somehow. No kidding. I used to endurance race 600s back in the day. I road race motorcycles for about 3 or 4 years. And then I switched to minis because I'm broken. I modified an XR100 and we used to road race on go-kart tracks here. Did you really? You know, it's funny because I have quoted Keith Code in this room more than once talking about the $10 worth of attention and how trading is very similar to that. And you might be the only person that really gets it. I've still got his book on my shelf. And trading is very much like that. And in the beginning, when you're looking, it's going to take you, yep, twist of the wrist. I never took a school. But I was doing this back in the day where a pain in the ass 15-year-old Ben Spies that just got his license and was going with Ingo, and Ulrich comes up to me at Texas World telling me how I can dump the clutch and back it into the horseshoe. And I'm like, yeah, no kid, I can't. That's funny. We'll have to talk outside of class sometime. But it's the same concept, right? The process yields results. The process yields results is exactly what it is. And it does the exact same thing. And where you put your efforts are where you're going to find the results. And what you focus on is what you're going to hit. Oh, were you really for the Kevin Schwantz Yost tryout? How cool is that? See, I've been on track with the Haydens, with Ben Spees, John Hopkins. That's kind of my generation. And I was still older then. Fun stuff. That's so cool. Guys, what do you want to talk about before VCP and I go off on motorcycle daydreaming? We've got a little time in the room, guys. It's open 100%. Anything you want to talk about. If there's something that you're having challenges with, something that you want to move forward with, something that may be a management thing, nothing's off limits, guys. It's not even that you're at a suggestions point yet, VCP. Every time you post a picture, every time you think you see a trade, every time you're wondering, right? I need you to talk about momentum and path. Every time. So this is where you're at the point right now where that's all we're talking about. And I think you're already solid on momentum. You're good with that, right? So path is going to be your next thing. Always asking yourself, have I reached an area? Yes, no clear path. And that was the challenge on this one. It was directly in, but it was a great lesson on momentum because momentum carried you through that key area and allowed you to get paid. Strong triggers can cover mistakes. So that would be the biggest thing for me is every time you post a trade, every time you take a picture, go back to these three things. Right or wrong, whether it's true or not, go back to momentum, clear path, and define your entry. And sometimes your entry definition is just, and this is my favorite acronym, just JTFI. Jump the fudge in because of the momentum, right? So you want to talk about it. You want to talk about why you did it. And the whole goal of annotation is a couple things. The first one is when you go back, you want to know what you did, right? What were you thinking? And then two, if it's good, you want to be able to repeat it. And that's kind of the whole reason for annotation. The momentum was insanely good, right? And this, even with, yep, perfect. And this is where I tell new users that momentum is insane, right? And momentum is wonderful. But momentum didn't break this area before it retraced against you. And momentum didn't break that area before it retraced against you. And momentum, you know, you're going to see it over and over. Where even with the best momentum ever, these lines can stop you. Do you see it? And that's why we've got a couple different rules, right? Because the momentum is kick-ass. That's the first thing we want to look for. Momentum is awesome. But then when you couple it with that clear path, dude, it's hard to stop that market. Can everybody hear me? There we go. Thanks for answering, everybody. Hey, what's up, Parker? Parker's hiding in the shadows. Andrew C, too. I love it. Thanks, guys. I like it when you guys sneak back into my classroom every now and then. That's good stuff. Does that make sense, VCP? Momentum is it's wonderful, but it's only one piece of the equation. These lines can stop a market cold. Yeah. So you learn how to piece them together. Egads. Machine gunning. C-dub. I don't care. There's no such thing as too many trades. Were your rules met? CW, you can take 1,000 trades. I don't care. It doesn't affect me at all. What are your rules for this entry? And what are your rules for this entry? And what are your rules for this entry? And what are your rules for that entry? And that entry? And that entry? Right? What do you want me to tell you? If you went short with momentum and a clear path, that's great. That's awesome. But you're not telling me why you did what you did. Do you want me to help you with waiting for an area? I'll do it. Okay. I can't fix that, C-Dub. I can't have you on speed dial and say, C-Dub, be patient. It's not perfect, right? Sorry. Yeah, too tall. Yeah, I wish I could fix that. I'd be a bajillionaire. So C-Dub, do you know your rule number 3? Do you have a rule number 3? Because the large chart looks great all the way down, right? You know it. Can we agree? As I know you well enough to know that you got to wait for an area inside of triggers, right? Okay. So, not one of these fits that. Can we agree? Oh, thanks, Mag. Cool. So, I'm gonna John Novak you. How many times can you lose breaking the rules until you get sick of breaking, until you get sick of losing? How many times can you break a rule and lose until you get sick of it? Where's that? And everybody's different, right? Everybody's got a different pain threshold. 10, you're better than I am then. You're about 1,000 better than me. But eventually what happens is 3,000's worth of busted accounts. 2,000, yeah. Parker, my first day trading live, I lost $5,000. 22 trades. I lost $5,000 and I had no idea why. But there's, so C-Dub, 10K over 3 years isn't horrible. That's a normal learning curve. Oh, 2,000 of eval spent on eval accounts? Right on, Parker. No, I lost $5,000 of my own money in 4 hours. Yeah. Have a plan, guys, and commit to it. I'd had the software for 30 days, and I never took a picture. I never asked John a question. My brother wrote the freaking software, guys. And I didn't ask for any help, but I got lucky on Simulator a couple times, and I assumed that I was ready to go live, and the market had other ideas for me. And the sad thing is I couldn't even tell you why I lost. I couldn't even tell you why I entered the market. So C-Dub, I don't know. You're just going to keep throwing money away until you get sick of losing money. And I wish I had a better answer than that. You don't trust your rules. I think is the biggest thing. Is usually people don't trust their rules. You can't take a picture of your trade of 8, Pete? Throw it in here. You can take a screenshot, right? So Parker, you're going to start posting. No, I'm not going to I'm not going to fuss at you. Let me tell you that right now. I'm not going to fuss at you. But I want you guys to see something. Just for grins, let me take a picture of this. And don't worry, VCP, I'll get to you. So Parker, C-Dub, all you guys that absolutely hate annotating your charts, I want you to answer this question for me. Do I have momentum? Do I have strong triggers? Do I have rule number 1 met? This is what I ask myself every time. Is rule 1 met? What do you guys think? Large chart, first bar. Do I have odds favorable momentum? Yes. And for those of you that are struggling following your rules, this is what I do every time I take a trade. Once I have momentum, and guys, this will happen in a fraction of a second once you have it down. Do I have a clear path? And guys, there's two things. You either understand what that means or you don't. If you don't, why the heck are you not asking questions in class? Why do they make you nervous? They should only make you nervous, Parker. Do you have a clear path? Did price reach resistance or the triggers below? Did price reach resistance? Triggers didn't break? These shouldn't make you nervous. These should make you thankful that you have a rule that says don't trade into them. What's making you nervous, Parker, is if I have a red line, I can't trade into it per my rules. If I'm not in a trade, I can't make money. Does that sound familiar to anybody? If I'm not in a trade, I can't make money. Show of hands, who made money today? Pete made money. C-Dub made money. And C-Dub's struggling, he's made money. But the idea, have you ever heard me say, Parker, that 90% of your day is spent waiting? That 90% of your day is doing nothing. And if you ask these people who said they made money today, how many trades they took, let me go back to probably the shining example. Two trades, $990. Enough for today, gonna go live life, see you tomorrow. Parker, that was at 11:24 a.m. At 11:24 a.m., Ron had taken 2 trades to reach his goal. And there's this point where you realize that being active doesn't equate to making money. And this is the part that you've got to go through and work through, right? That you don't have to be in every move to make money. But if you're in the best moves, the potential to make money is there. And when you're not in the move, that is the wrong move, you're not giving money away. Does that make sense, Parker? People used to type in this room, NMM. So many times. Okay, so show me 5 pictures when that happened, where you took a trade and then one printed right when you got in, because it does happen. So fib updates every 2 hours. What time frame is your? So at 8, at 10, at noon, at 2, at 4, at 6, at 8, and so on and so forth. So Parker, if that happens so many times, Don't trade 5 minutes before 8, 10, 12, 2, 4, 6, or 8. How's that? Problem solved. You'll never trade into a fib update. So we just fixed that problem. All I needed was for you to post it in the room. I saw. All I needed was for you to tell me where you had a challenge. And my promise to you guys every day is that we'll find a way to fix it, right? So if you're sitting at home and you're suffering silently, guys, that's on you. I can't fix anything you don't share with me. Can't fix anything that isn't shared in the room. So VCP, these light blue lines, these cyan lines, are what we call divergence lows. And at the other end of the spectrum, whoops, I just put the picture in the room for you again. Anytime there's a loss of momentum, you'll see that cyan line print. And anytime there's a loss of momentum at a high, you'll see it as magenta. It just means there was a loss of momentum. So we're going to use it if price reaches one of these lines. These are one of the ones that can act as a termination condition. Or on the smaller, faster chart, 3 in the same price range is a termination condition. All right. Yeah, Pete, this doesn't really give us anything to work with. Sorry, dude. It's just executions. Sorry, I thought there might be more information on there. Let's go through it, Parker. Same picture I just put in there. So what are the dotted yellow? Those are yellow 1-to-1s. And if price trends up to them, they may act as resistance. And if price trends down, they may act as support. These are 100% Fibonacci projections. The market will make swings, and this will show you where a 100% move would be. And institutional traders use them, so they show up on your chart. The light pink dotted lines are small swing 1-to-1s, and unless you're trading the NASDAQ, they're pretty insignificant. So much so that they don't work their way into the areas. And I hope you don't feel this as fussing. But Parker, if you're trying to trade the software successfully and you're not even familiar with the very basic concepts and terminology, you might be doing yourself a disservice, right? If you don't know what a 1-to-1 is, or at least that it can create problems for you, how are you going to be successful with termination conditions? And I think people do this a lot. And so I'm not picking on you, and I know I did it. We begin to teach ourselves in half-truths. We begin to take trades based on what we believe is the correct read, what we believe is the correct entry, what we believe are the advantages. And guys, this is why this classroom pays dividends for so many people. Because the second, Parker, and everyone else in this room, the second you post in a room and you tell me what you see, I can find a way to help you, right? So Parker, you told me that fibs pop up when you take trades, right? And it was instant. We had a fix for you, 100%, so that never happens to you again. That's where the trade works, guys. You have to know what you're doing right and wrong so that we can fix it. And Parker, I have effed up everything known to man. That's why we don't trade into terminations. Pretty cool, right? So if you've broken it and think that you're alone, you're not. I've done it. Yeah, me too. Ask my wife. And then Parker, here's one of those things. Check it out. I can't go long. I don't have a short. I can't go long. I don't have a short. I can't go long. This is that 90%. This is where you just have to say to yourself, there's just nothing to do. I don't have a statistical advantage. And it sucks because you want to be in a trade. So be hard-headed. Fight me, dude. Fight me at every turn, right? But show me what you're doing. Give me a chance to help. You'll be floored at how quickly things work out. And I'm going to end with a story because this is a funny one. and you've probably heard it. I found my way into both in life. Guys, I had a gentleman call me once and told me essentially that I'm full of shit, that Nexgen's full of shit, that everything we do is absolute bullshit and it can't be repeated. And that's cool. That doesn't bug me at all. I want you to come at me with that sort of disbelief and skepticism. And I said, well, show me your last 5 trades. And Parker, this is what I'm doing to you. Show me your last 5 trades. And he goes, they're perfect and this crap doesn't work. And I use the KISS plan up against him. And the first trade that he shows me doesn't have any momentum going for it. And it's into a termination. And the second trade, he's in on the wrong side of triggers. And the third trade, it was divergence on a 50-50. And everything that he did broke a rule that I teach that's very basic that I give in the very beginning. And he said, oh, we talked about that it wasn't a broken area, that it was a potential to break. And he goes, oh, I didn't know that. That's cool. And I said, notice how this is momentum and that's not momentum. And he goes, oh, I didn't know that. Well, it's because you tried to teach yourself and you didn't ask for help. So we took a week in the room. He was in the room. He posted everything. He was good. He was mean at first, but he was good. I didn't cry. And I said, do me a favor. KISS plan, 5 days. Now we've cleared up the misconceptions on the rules. Follow the KISS plan for 5 days and tell me where you're at. And he disappeared for that 5 days. And I thought, man, he's either going to blow it out and I'll never see him again, or he's going to come back. And he came back on the 7th day, right? He traded Monday through Friday. He took the weekend to build a shrine in my honor. And he called me on Monday and he said, you know what, Mark? I was looking for every move in the market. I wasn't looking for the best moves. And when I followed the KISS plan, I think he was like 87% winners. And he goes, and he told me, he goes, I'm sorry. He goes, Nexgen does work. It works amazing. He goes, I just never bothered to learn it. Because he wanted the money. He didn't want the process that created the money. And guys, I say this not to be like, oh yeah, I'm right, he's wrong. He wasn't. He was absolutely right. What he was doing didn't work at all. But he wasn't doing the good stuff. He wasn't doing the right stuff. And he had just enough misconceptions that it was damaging. And once we fixed him, once he gave me the opportunity to fix him, guys, I can fix anybody. I can fix your understanding of the indicators. I can't fix your brain. I wish I could. I can give you things to think about that might help your brain. So, Parker, thank you for being a sport, and thank you for trying to do it on your own. Let's change your life now. Let's give you what you need to be successful, right? Let's get the basics and build that foundation, and dude, you'll grow from it. And everybody does. Right, Jen? Jen used to look for every trade. I think everybody in here used to look for every trade. I did. For sure I did. You guys with 8 screens and 72 markets and every indicator package you could find on eBay, right? And you still can't seem to make money, and then these assholes following the KISS plan are profitable every day. Patience goes a long way. I noticed that you incorporated another trade today, Jen. And it's funny because I almost sent you a text yesterday about that very trade. And I was like, I'm not going to mess with her. She's in a good spot. And then Mr. Flowers, if it sounds like the preacher's talking to you, he probably is. Yeah, focus on the chart. That's true. My order of markets to work in. So VCP, I typically trade crude oil in the S&P. They move the smoothest. They're the easiest to follow. I've also got enough experience and reps under my belt that I can make money in the NASDAQ, even though it's about 10 times faster. But if you're not 100% on board with what it is you're looking for, the NASDAQ will eat you up. I find gold to be too erratic. I don't care for it. Some people do wonderful with it. And then some people trade the RTY and do great with it. I've never actually traded it, so I don't have an opinion on it. But I teach on crude oil in the S&P for a reason, because they're typically the smoothest. Bitcoin, I don't trade cryptocurrency. If that's your thing, though, VCP, talk to my brother. Send my brother a message. He built Bitcoin, and he trades Ethereum. And the cool thing is what we teach works on any market. It works on feeder cattle as well as it does on soybeans and orange juice. And there's people that trade Apple and Tesla. John was showing me a Tesla chart yesterday, defining areas. So learn the basic patterns and then just put them wherever you want. So find gold nuggets. I love it. Steve, keep doing it. Nobody that I know of, but you could, right? 10-year bonds, 20-year bonds. What's Gino, do you know a symbol by any chance? Orange juice? You don't? Let me see. This is OJ. I don't know if this is actually orange juice futures. No. So OJ is not orange. No worries. VCP, have a good one. There's a million ways to use the software, guys. What's feeder cattle? Feeder cattle is FC, I think. No, maybe not. Very cool parts at Gmail. I like it. Take care. And if you need something, you can always reach out via the messaging system here. You bet, Moose. I'm glad you did. Oh, that's your very cool parts? Right on. I'm going to look you up. Thanks for being here, Moose. Start showing me some pictures, man. There's amazing lessons in pictures. There you go, VCP. That's my Instagram handle. That's what I do when I'm not teaching you guys to read indicators. It shocks a lot of people. Shocks a lot of people when they see. Guys, that's it for today. Thanks for being here.